for the Bitcoin treasury space? What does this mean for Bitcoin?
I mean, yeah, great update, and yeah, Borka, thank you for explaining all the points. I think overall it's great for the Orange team. So I think now it starts to be like mainstream to think about Bitcoin entering also the corporate side, both on the public side and also on the private side. I think each company, especially a good profitable company, should consider allocating portion of their own cash and future cash flow into Bitcoin as a new market practice for corporate finance. I think it's like unreasonable to not add Bitcoin to your balance sheet. Maybe not necessarily to leverage it up, not necessarily to use debt to add more financial constraint to your own companies. But if you are a CFO, if you are a founder of a company and you have good cash or unused cash and future cash flow, you need to consider allocation into it. So I think this trend will increase. We will see so many new companies coming into this trend. It will be insane to monitor all of them. So yeah, I think it's great, and ultimately might be not great for a specific ticker, but I think it will be ultimately positive for Bitcoin because, as you said, is a continuous bid, a constant buying pressure. And we should remember that on a daily basis, we only have 450 new Bitcoin available for mining. And I think since the new trend of the Bitcoin equities, I think the 450 is easily by just Strategy, Metaplanet, and few others. So if this trend keeps going on, at some point we will see some kind of supply and demand imbalance. And so we will see, probably some price discovery for Bitcoin if the trend is healthy and is coming forward. So very positive for me.
Good. Very cool. I had one question for you, Bati, and Diga, and then Borja as well, of course. In terms of like where are we standing now in terms of the market of Bitcoin treasury companies? And I wanted to share very quickly an image that I've been like digesting the last couple of days in terms of basically the market, the current market status in terms of Bitcoin around equities right now. If we take a look at the picture, we have the chart. Basically, we have the ETFs in dark blue and Bitcoin treasury companies market. Of course, Bitcoin treasury companies.
Yeah, sorry to cut you. I think your screen is not here on the stage.
Oh, sorry, guys. Yeah, so basically dark blue ETFs, light blue Bitcoin treasury companies. Of course, Bitcoin treasury companies have been for a longer time in terms of strategy and everything that happened. But ETFs had clearly the surge starting last year in the equities market, and we've seen a sharp rise on both, honestly. Right now, basically, ETF sitting at 2 million on BTC holdings, treasuries at almost 700K or so. Basically, they already have 3% of Bitcoins around the globe. So I wanted to know, pick your brain in terms of how do you see the next 6 to 12 months of this trend? Is Bitcoin treasury companies, does it make sense for them to be eating market share in the future in terms of ETFs? Will both grow? What do you guys think about this?
Shall I go first?
Yeah, please, Bati.
I mean, it's a great question, and I think we can just speculate on that. It's again, it's another good mental exercise. I think like the ETFs are a very, very good product for the most seasoned investors and for most of the institutional side. So I would expect that if Bitcoin is really maturing and we will surpass the idea of the 4-year cycle, that I'm struggling to to have a clear opinion as of today. Maybe in few months will be easier to have it. On one side, I think we might be kind of over, but maybe we need one new halving cycle just to settle for everyone the outcome of this. I think the ETF will still keep growing because again, I think only few percentage of the big hedge fund, the pension schemes, etc., owns the ETFs, the Bitcoin ETFs. So I think in the grand scheme of things, ETFs are still not very used by most investors and most hedge fund manager and most money market manager funds. So I think it will increase. Then, of course, the pace at which it will increase will, for me, indicate if we are in the euphoria phase and then potentially into a drop or not. So maybe we start to see. I don't think right now we are in the hot phase for many metrics. We will need to see probably end of 2025 and beginning of 2026 to maybe re-update on that. So hopefully for me, what I would like to see is keep grinding on the price, keep grinding on new companies coming in, and also keep grinding for the ETF in a healthy way, meaning go up, not vertical, go up in a gradual way, maybe redistribute a bit, stabilize for a while, and then grow up again. As long as the market cycle is like this, I think it's healthy, and I think it's very positive for Bitcoin ecosystem as a whole.
Yeah, I hope the market listens to you. I mean, that makes a lot of sense for me too. And of course, we're still to see how the Bitcoin treasury companies market advances. It will be. I think this next 6 months for me will be very telling about how they grasp on the global view in terms of holding Bitcoin, and see if Bitcoin can give us as well some important movements in the market to see how they defend themselves and everything. Awesome. I don't know, Digant and Borja, if you had any comments on it.
Well, I think I also it's pretty speculative to be here, but I think ETFs will keep continuing outpacing Bitcoin treasury companies, because most of the institutional investors might not be okay with higher volatility, which is very high in case of Bitcoin treasury companies. So if they want Bitcoin exposure and they have an access to Bitcoin ETFs, then it's go to buy Bitcoin ETFs rather than buying a Bitcoin treasury stock. And this is a trend. Like a few days ago, I think Harvard University bought some 100 million, or I'm not correct on the numbers, but they bought some Bitcoins for their endowment, if I'm not wrong.
Awesome.
So, Bati, thank you so much for coming. We have 1,600 people watching live right now. Any final words that you want to share to our audience?
Yeah, Borja and guys, thanks a lot for inviting me. It was a pleasure. I think we just need to now maybe just realize that it's also August. So we had this kind of movement that was probably not very, for Bitcoin, I'm talking for Bitcoin, for like not very sustainable for maybe to the 124 and now back to 115. So we had some kind of maybe cleaning the leverage, cleaning some kind of, price action due to the small volume that we normally see in August. The macro conditions, I think, are pretty solid overall. We don't see much leverage on the Bitcoin space so far from many metrics. Overall, the indices that I'm following are kind of between neutral or not really in the hot zone. So I think, it would be very interesting to see how the Q3 and mainly the Q4 will unfold, and with the Federal Reserve also decision over the next weeks. Depending on how they will drop the rates, maybe market will react in a very euphoric way. So I think, we just need to be, following the Bitcoin space and try to not be over optimistic or over pessimistic just for like few weeks of price action on Bitcoin or also on the Bitcoin equities. If we believe in the fundamentals, I think it's we will gonna recover any price movement.
Amazing. Thank you, Bati. One last question, Bati. Where are
Yeah.
you calling us from?
I'm from Italy,
What part?
close to Ancona,
Close
so
to
in the middle.
I do not know Ancona, but okay.
Yeah, south
here-
of Bologna. Maybe it's a bigger city, so maybe it's easier for.
Perfect. What's
the
the signature dish in your region?
It's something fried with meat and olives. It's like pretty good. And,
How do you
I
call
would
it?
say olive ascolane.
Olive ascolane. So guys, next
Yeah,
time
so
you're in
maybe from
Italy,
Argentina, you have some kind of similar dishes as well. We have some shared, basic in also in food. So maybe
a lot.
yeah, I know.
Argentine cuisine is like the Italian and Spanish basically. So
Yeah,
oliva and solane, you said.
yeah, olive alla scolana. Yes.
Oliva alla scolana. Okay, guys. So
Yes.
next time you're in Italy, you ping Marco, Bati, and
Yeah, ping
go
me. Yes.
Oliva alla scolana. Bati, thank you so much.
Yeah, it was a pleasure, guys. All the
Pleasure.
best. See you soon.
Ciao.
Ciao.
So, guys, this was Bati Marco calling us from Italy. Thank you, Marco, for coming. It's such a pleasure. So now we're coming to the end of our show. We have 8 minutes left until 2 p.m. Argentina time, and God knows what time it is in wherever you're watching us from. My last question, guys. Last week looked really active. Plenty of things happening. We reviewed all the news and everything going on today. Luca, I'd love if we can go over Bitcoin's chart again one last time, making sure that we all know what the hell is going on with Bitcoin. Again, the way I see it, we're in no man's land. It feels like so. I like to. This is something very personal. I like to trade options, guys. This month for me was an amazing month. I honestly did amazingly well. No financial advice, no nothing. Remember, just personal opinion. I tell you what I did. I sold puts at 90K, 94K, 100K. I sold calls at 145K. I then sold calls at 136K. I've done brilliantly. Right now, with this Bitcoin price, I do not know what to do. And this is why I call it no man's land. I'm not sure if I want to sell puts because I'm like a bit worried about what strike price I should set. I'm neither convinced if I should sell calls because like I'm seeing that maybe like I don't know what's going on. So Luca, please, one last analysis. What the hell is going on? Are we on no man's land? Are we not? What's up?
I think Borka, you said it perfectly because there's in trading. I love to say that it is the sitting part that makes you money. That's what old trader said in terms of you gotta know when to trade and you're gonna and not trading is also part of the game and it's also a trade itself. So for me, I think we're at the mid of the channel. If you can share my screen real quick. Basically, we just touched today the mid channel, and for me this is a no trigger zone because I mean, yeah, you could take a risk early long here, but there's no where would you put your stop loss? This is my personal thoughts. Guys, I'm sharing it out loud because I love to trade. So for me, trading triggers are either above a reclaim at $117,000 probably. That's the breakout of the higher channel. This for me would give me a good stop loss below the latest low, and I'm targeting highs again. That's one trigger. But for me, the best business would be around the lower part of the channel. Again, the 111 round number would be a psychological beauty for me to trade. And yeah, looking for to beating that with a stop loss below the latest low, and see what the market can give us. For me, we should be patient. There are times where euphoria kicks in. There are times where patience is what favors the most. And as Warren Buffett said, money on the market is being transferred from the impatient to the patient. So that's what we're trying to do this week. At least myself, of course, not financial advice. And I hope everyone has a great week.
Thank you, Luca. Digant, what should we be paying attention to regarding treasuries for this week? What are the must watch or stay sharp? Make sure you're checking what's going on the Bitcoin treasury space.
Well, I think as Richard, which we had a guest earlier, so I think he mentioned a point in where the 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 people who are backing the Bitcoin treasury company, and if you find that treasury is at good valuations, so for me, Metaplanet, a smarter web company, Capital B. So these companies are like their MNAV compression has been done in the past few days and weeks. So I think they are currently at much good levels as compared to in the past. So in the past they were at much higher valuations, but currently they are trading at around 2 MNAV. So these are some companies which I am personally tracking, and yeah, that's it.
Amazing. Thank you, Digant. Thank you, everybody. This was another Monday. Now, remember, from now on, if you're already a hardcore fan, follower, or just viewer of the state of Bitcoin markets, and you want to make sure that you know what's going on with Bitcoin treasury companies, what's going on with Bitcoin denominated assets, what's going on with Bitcoin stuff in general, but mainly those two things, make sure, remember, every week, now on, every Monday, at 2 p.m., 12 p.m. Argentina time, which is 11 a.m. Eastern time, so New York City time. Then make your math. We'll be talking about Bitcoin treasury companies, what's going on, the latest purchases, the latest news, what's going on with Bitcoin denominated assets. Again, very, very soon, we'll be analyzing S&P 500 Bitcoin, NASDAQ Bitcoin, gold Bitcoin, oil Bitcoin, and much more. So guys, community, family, everybody, thank you so much. Thank you for your support. Please make sure that you follow, that you subscribe, that you follow Roxom, RoxomTV, ourselves, everything. This is going to be a very, very fun journey. This is the tip of the iceberg. There's plenty more coming up. So stay tuned. Let's see what's going on. And we are off. Thank you, everybody. Until next week.
So,
Thanks,
tell us
guys.
about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Today on the Blockchain Report, Bitcoin's back at 116K after $500 million in liquidations. Congrats, degens. You just played yourselves. Michael Saylor just bought another $51 million in sats because apparently orange coin addiction isn't covered by insurance. And US AI experts tour China and come back saying, yeah, we're cooked. Uh-oh, turns out our power grid runs on duct tape while China is basically living in the future. All that and more right now on today's show. Let's go. Good morning, my Bitcoin baddies, and welcome back to a new week of the Blockchain Report. I'm Hank Hudson reporting to you live from San Francisco, where the coffee is $7, the rent is $7,000, and sidewalks come with free bonus levels that literally nobody asked for. And yes, it is Monday, the day we all pretend to start fresh, even though our fridge is still full of regret, takeout containers, and whatever's left after your weekend bankroll is all spent up. Now, quick programming note in case you haven't noticed. On Mondays now only, we're coming to you live at 10 a.m. Pacific. The rest of the week, we're back to our usual ungodly slot of 8 a.m. PST. So if you're late today, congratulations, you're accidentally on time. Now, before we dive into today's buffet of over-leveraged dreams, boomer senators cosplaying as crypto experts and billionaires tweeting like they're still in high school, let's start with a little financial theater. Pretend you're bullish on literally anything in your life and smash that like button like it just dumped your bags at the top. And while you're at it, follow RoxomTV and yours truly at Hank at RoxomTV everywhere that you go to doom scroll. All right, time to see who survived the weekend or didn't in this morning's market rundown. Let's do it. Oh boy, let's see how the crypto gods are treating us today. Not great. They don't love what we're doing right now. Here's how things are looking. Right now, Bitcoin has creeped back up to 116K. We even saw it touch as low as the 114s for a half a second there. It shot back up to 115. It looks like we're getting back on track though. We got the momentum, and we're gonna have Stephen Orr, Mr. Big Beat himself, talking to us about the markets in just a bit and gonna tell us where he thinks things might go, so stay tuned for that. Ethereum chilling at around $4,300 a coin this morning. XRP is down about 2.5% in the last 24, currently sitting just above $3 a pop. Cardano down nearly 5.5%, currently just beneath 91 cents a coin. And Dogecoin doing what it does best, nothing, sitting at around 22 cents a pop. Let's see if the stonk market is treating us any better this morning, and the answer is kind of. It's kind of treating us better, so that's a start. Right now, the Dow Jones is sitting at just beneath 45,000. The NASDAQ Composite down about $37.50 this morning. Not a lot of action going on there. The S&P, more of the same, down about $6. So not a lot of action happening in TradFi. MicroStrategy/Strategy, they are currently sitting at $365 a share. Tesla is up a percentage point this morning. Coinbase is up nearly $5.50 a share. Nvidia sitting pretty at $181 a pop. And last but not least, we got GameStop sitting just beneath $23 a share. All right, we got a lot in store for you today, but we're going to take a quick break first. But when we're back, we're going to be doing our bull run with this morning's top story. So stay tuned. All of that and much, much more on today's show. We'll see you right after this. right, welcome back to this morning's Bull Run. This is the part of the show where we go over the top stories of the day so that you can spend your morning doing whatever the hell else you want. We do the heavy lifting for you. Let's jump right into it. Well, first up, as the new old adage that I just made up this very second goes, Bitcoin giveth and Bitcoin taketh away. After smashing a new all-time high last week at 124K, its fourth one this year for those of you keeping track at home, Bitcoin has cooled off to around 116K as of right now. At one point, it even dipped as low as $114,706, triggering more than $500 million in forced liquidations. I don't like it either, guys. Don't like it. But that is what happens when over 131,000 traders lever up and get margin called into oblivion. In just 24 hours, about $123 million worth of Bitcoin longs were liquidated, along with $178 million worth of Ether longs. Now, Ethereum itself slipped 4%, down to about 4,280 after nearly touching its own all-time high of 4,800 just last week. The spark to all this? Higher than expected inflation data for July, raising some questions about whether the Fed will actually cut rates this coming September. And because crypto traders are allergic to bad macro data, they, of course, panic sold. Adding to the drama, Treasury Secretary Scott Bessent clarified that Trump's so-called strategic Bitcoin reserve will only come from coins forfeited to the federal government, meaning no trillion-dollar Bitcoin shopping sprees just yet. Crypto stocks also took a hit. Bitmine Immersion dropped 6%, Sharplink Gaming fell 3%, and Bullish, which literally went public last week, slipped 3% in pre-market trading. Now, despite the pullback, ETFs are still stacking sats. Bitcoin ETF saw $547 million of inflows for the week, while Ether funds raked in $2.9 billion, their 14th straight week of inflows. So while traders cry liquidation, the institutions quietly keep buying. Now, history says that August is usually a weak month anyway. September's Fed meeting is where the real fireworks will be. Until then, think of this dip as a, strategic cool down, or if you're over leveraged, think of it as a very, very expensive lesson. And Michael Saylor, well, he's back at it again, and surprise, surprise, he is still very much allergic to fiat. Strategy has now scooped up another 430 Bitcoin, spending about $51.5 million at an average cost of $119,666 a pop. Ugh, eerie number. Now that brings their hoard to a very casual 629,376 BTC, valued at about $17 billion at today's prices. And for anyone keeping score, they've invested $46.2 billion in total, which means they're sitting on more than $26 billion in paper gains. Not bad for a company that used to be called MicroStrategy and sold business software. Now they're basically a publicly traded Bitcoin hedge fund in disguise. Saylor even teased the move over the weekend with an X post reading, "Insufficient orange." There it is. Or in other words, Daddy needed more sats. And that's exactly what he did, because he wasn't kidding. This most recent purchase pushed Strategy even closer to controlling 3% of Bitcoin's total 21 million supply. They're funding the spree with an alphabet soup of preferred stock offerings. STRK, STRF, STRD, STRC, all paying fat coupons so they can swap Wall Street's cash for orange coin. It's part of their 42-42 plan, targeting $84 billion in equity and convertibles through 2027, because apparently $21 billion wasn't enough the first time around. The results? Well, record net income of $10 billion last quarter, thanks almost entirely to Bitcoin's mark-to-market accounting. Meanwhile, their actual stock price has dipped more than 13% over the past month. Investors seem to think that holding nearly 630,000 Bitcoin is risky, which is hilarious because let's be real, fam. Fiat companies with zero Bitcoin are the risky ones. Now, Strategy is now the king of corporate Bitcoin treasuries, dwarfing everyone from miners like Mara and Riot to copycats like Trump Media and Japan's Metaplanet. And while Wall Street analysts argue about the company's premium to its net asset value, Saylor, He just keeps on buying because in the end, there's really no such thing as insufficient orange. You know what I mean? That's right. And Japan's Metaplanet, we just talked about them a second ago, well, they're still trying to cosplay as Michael Saylor. The Tokyo-listed firm just bought another 775 Bitcoin for around $93 million at an average cost of $120K each. That pushes their total stash to 18,888 BTC, worth about $1.94 billion at an average purchase price of $102,600. Now, President Simon Garovich announced the move with the understated line, 18,800 BTC, onward and upward. They're always cute with their numbered buys, that company. Now, this all comes as Bitcoin itself slipped 2% to around $115,000, $116,000, which is when smart buyers tend to start stepping in. Metaplanet, once a struggling budget hotel chain called Red Planet Japan, has now reinvented itself as a full-blown Bitcoin treasury company. Their Q2 earnings show the pivot is working. Revenue jumped 41% quarter over quarter, swinging them from $34 million in losses to a $75 million profit. And yet their stock fell nearly 9% last week because traditional investors still panic when they see Bitcoin on a balance sheet, while people who actually get it know it's the only balance sheet that really matters. Now, the company has even announced plans for a $3.7 billion stock raise to buy more Bitcoin. Analysts point out the risks: volatility, equity, dilution, cash crunches if BTC drops hard. But those same risks are what make Metaplanet a pioneer. This is the corporate playbook: swap fiat, buy Bitcoin, survive volatility, and watch fiat melt away while your balance sheet hardens. It's not unique to Japan, but Asia's regulatory patchwork makes it harder for other companies to follow suit. So Metaplanet stands out, both as a cautionary tale if Bitcoin collapses and as a hero if Bitcoin moons. Given history, I think we know how this story is going to end. Onward and upward. Yeah, indeed, boy! Yeah, thanks, Flav. And in other news, the United States might have stumbled onto the most Bitcoin thing ever, buying sats with tariff money. Author Adam Livingston, who literally wrote The Bitcoin Age and The Great Harvest, says the U.S. should funnel its monthly tariff surpluses into a Bitcoin strategic reserve. And yes, there actually is a surplus. So far this fiscal year, the government has collected $135.7 billion in customs duties. That's double last year's pace, which means there's about $70 billion just floating around, unallocated, not tied to Medicare, debt service, or any other sacred cow. Livingston's pitch is actually pretty simple. Stop letting that money sit idle and start stacking BTC with it. Put it into cold storage. Don't stake it. Don't loan it out. Don't try to get cute. Just hodl strong, baby. Now, the beauty is that it checks Trump's box for budget-neutral pathways. His executive order bars the government from dipping into new funds for Bitcoin, meaning any fresh buys have to come from existing surpluses. Treasury Secretary Scott Bessent, however, can't seem to keep his story straight. Last Thursday, he told Fox Business flat out, "We're not going to be buying that." Then, a few hours later, he backpedaled, saying the government is exploring budget-neutral pathways.
You are fake news.
In other words, yay, we're still hoping for loopholes here. Other budget-neutral ideas have been floated. One is revaluing Treasury gold, which is still marked at a laughable $42.22 per ounce instead of, the real $3,335 spot price. Another is dumping barrels from the Strategic Petroleum Reserve and swapping oil for Bitcoin. But tariffs may be the cleanest option. They're already collected, they're unallocated, and they don't require Congress to raid the Social Security Trust Fund. So while Americans argue about whether tariffs are a tax on consumers, Bitcoiners are sitting here thinking, if this tariff surplus to Bitcoin idea happens, it might be the first time in history tariffs actually did something useful. And Cathie Wood, she's back at it again on her soapbox, this time predicting that Bitcoin will 15x by 2030 and hit nearly 900K. Yeah, just breathe that in for a second. $900,000 per Bitcoin by 2030. That's 4.5 years away, and I love it. Now that means if you're still stacking sats, congratulations, you might be richer than your boss by the end of the decade. Now, boy! He is really excited today, and so am I. So what is Kathy's logic here? Well, institutions can't resist Bitcoin anymore. All it takes is a tiny sliver of their $1 trillion portfolios to send demand into absolute overdrive. Meanwhile, supply stays locked in at 21 million coins. Translation, Wall Street finally figured out there's a limited menu and everyone's ordering the same entree. Wood says that Bitcoin is the new digital gold, but shinier, scarcer, and way easier to carry through airport security. She's also doubling down on her favorite talking point, Bitcoin as an inflation hedge. Forget about gold bars, just hodl some magic internet money and you can call it a day. Naturally, the forecast set off a wave of bullish cheerleading across crypto Twitter because nothing says healthy market like price targets that sound like Powerball jackpots. Of course, the skeptics are out too, pointing out that Bitcoin is still volatile, regulation could kill the vibe, and Kathy, well, she's been wrong before. But hey, she also called Tesla before it was cool, so maybe don't bet against her entirely. At the end of the day, whether Bitcoin's at 900K or still grinding sideways, one thing's very clear. Traditional finance can't ignore it anymore, and that's half the battle. The other half, surviving the roller coaster without selling your coins at the bottom. And Galaxy Digital CEO Mike Novogratz, he's here and he's ready to kill the vibe. While some Bitcoiners are salivating over predictions of $1 million Bitcoin by 2026, Novogratz says if that happens, it's not cause for celebration. It means the US economy is in some serious trouble. People cheerleading for $1 million Bitcoin next year. I was like, guys, that only happens if we're in a shitty place domestically, he told Natalie Brunell on the Coin Stories podcast. He'd rather have a lower Bitcoin price in a stable United States than a moonshot caused by civil unrest and the collapsing dollar. Novogratz pointed out that when national currencies fall apart, citizens don't win. They just scramble into whatever safe haven they can find. Bitcoin becomes that digital life raft. Other analysts have echoed the same sentiment. Scott Melker, the wolf of all streets, said back in 2023, the faster it happens, the worse the world is. Of course, not everyone agrees. Arthur Hayes has been calling for 750K to 1 million Bitcoin by 2026, and Samson Mao says we could hit 1 million maybe this year, maybe next. Novogratz also took a swipe at Treasury Secretary Scott Bessent, saying he's failing to rein in the debt to GDP ratio under President Donald Trump. The deficit is going to be higher, not lower, he warned. He's also nervous about the Bitcoin treasury frenzy, saying Galaxy gets 5 calls a week from new companies wanting to put their BTC on their own balance sheets. So when cab drivers start asking about Bitcoin treasury strategies, that's when you know it's bubble territory. Still, Novogratz is pro-Bitcoin. He just wants it to rise in a healthier way, not as a byproduct of a burning economy. So, yeah, $1 million Bitcoin, it sure sounds sexy. Boy. Yes, man, he is on it today. But if it happens overnight, don't pop champagne. Start stocking some canned goods. All right, we're taking a break. When we're back, we got more Blockchain Report in just a bit. We're going to be joined by Mr. Big Beat himself, Stephen Orr, to make sense of these markets. So stay tuned. More Blockchain Report coming back to you right after this.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, Come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back to the show. We're at that fun time of the day where we're at our market check with Mr. Big Beat himself, Stephen Orr, joining us. Stephen, how are you this morning? Happy Monday.
Hey, Hank. I think every time you look over the weekend and you see what the whales are doing and you look back and you go, I don't care, right? When you look at the market in general, and I think there's just so much hot noise that just goes around the world, and we have to kind of filter that out sometimes. I want to see what they're actually doing and not what they're saying. As my grandfather says, do as they do and not what they say, right? A lot of times when you're looking at the market and you're hearing news coming out, what they're saying to us right now is that, hey, look, the market ran up a bit on the Bitcoin. Let's take some profits off. And they did that, right? And they've been doing it for a little bit. But the question mark that I need to be answered this week, and as you always know, Hank, my answer to everything is always clarity. When I get clarity on something, then I know a little bit better of what I'm thinking and what I'm going to do and how I position myself. And that position is being asked around the question of Jackson Hole this week. Why Jackson Hole? Well, it's the Fed symposium, right? This is the time we find out what it is that the Fed is actually thinking in a setting that's not quite blasé, like as in DC or New York, right? We get to see them in a nice little setting with the cold weather in the morning and hot in the afternoon, and they go on the CNBC and Bloomberg and the talk shows, and someday hopefully they go on RoxomTV and tell you what's going on. But this time they get to ask questions. right? In a way that's a little bit clearer setting. And hey, what are you really thinking, Powell? What are you really thinking, Fed? In a way that I want to know where, yes, I see your press releases every other month. I see what you're thinking in your meetings. But what are you thinking outside of that meeting? What is your thought process around that? What is the data sets that you're looking at? And for me, that answer is going to be a lot closer. Now, we saw over the last few weeks, we saw one thing, right? We saw FOMO happen because they thought we were going to get a big cut and that's going to make everybody happy. And now all of a sudden we see inflation numbers come out, that clarity that we needed to see. We saw PPI numbers, CPI that just came in. Inflation was hotter than expected, as most of us on Wall Street totally expected. It wasn't anything new. But what we wanted to see now is the Fed still on track for that cut? And the answer is yes, 25 basis points. Are they in cut for a jumbo? No. And will they? Probably not. Because if they do a cut in a jumbo like that, that's problems, right? The cracks are bigger than we think they are. If they have a jumbo or we call it intermeeting cut, that's also bigger problems. And that does not mean risk on. Risk on is when you see these 25 basis point cuts, 25 points, here, another one in October, and another one in November, December. That's when I like these things. Not fast and speedy. I want to see them nice, slow, and steady, and that's what we want to see. The second thing you want to see is whether or not how they're feeling about their jobs at the Fed. Powell knows he's out, but the people to replace him are all Trump people, right? So when you look at it from that perspective, will a bigger one come? Probably, yeah. But will they listen to Trump? Yes. Will there be a separation between the White House and the Fed? That's getting a little murkier, and so that bothers me. So when I look at that, Hank, the thing I just got to show you right now is I think everybody should look at one chart and one chart only when it comes to Bitcoin right now. And that's the dollar, or better known on Wall Street as the Dixie. So when we look at the Dixie, right now, I am seeing, you can see my charts up now, right now, you can see that we are pushing up a little bit to the upside. I'm going to pull up a dollar or a Dixie, pull up in a day chart. We have started to find a base right here. If you can look at this base here on the charts, you can see right around the 98 handle. About a month ago, you saw it pushing above the 100 handle, and that's where it kind of slipped and stopped. Why is the dollar that important, Steve? Bitcoin's based in Satoshi. It is. But a lot of investors are actually seeing whether or not how much appetite risk they have on from the U.S. side, which has been the hottest. Why? Because of ETFs. Why? Because of derivatives. So we're seeing that now. We're basing again here at 98 and a quarter, 98.12. This handle here is a little bit, you can see right here. I think we're going to push back above 99. That's going to be pressure against Bitcoin. A lot of pressure on Bitcoin. We're going to see pressure on the Bitcoin based on the Fed. If they say, oh, look at the inflation numbers. Oh, look at these numbers again, the jobs numbers. The cracks are here. That could cause a little bit of an issue. But for me, it's not. It's still all about Bitcoin and all about accumulation. So what is Michael Saylor doing? So I'm going to pull up a Bitcoin chart on that same daily chart, and you can see it's based again. A dip this morning. It's by the dip. It is still BTFD, if I can say that here live on the air. It is still the same, right? Why? Because we are going one direction. If you look at the daily chart, we're still going in the same direction. I'll pull up a little line. There it is. Right? There it is. And as we pull this line up... Go ahead.
Oh, no, I was just going to say, so from your opinion and where you stand right now, you feel like this most recent crash from 124 to 115, all high 114s that we saw, is just a normal pullback. We're seeing some profit taking and a little bit of uncertainty in the market as we await for more information about the Fed cuts and then the dollar. Is that accurate?
100%. This is, if you've been around the Bitcoin as long as we have, Hank, this is not even a crash. You call it a crash. I call this a blip. I call this a bump on the road. It's not even that. It's nothing. You saw $300 million of liquidations over the last few days, over the weekend, right? But if you saw the pump going into ETFs, it was into the multiple of billions, hundreds and hundreds of billions of dollars going into the... So it wasn't them taking the money out or off the exchanges. It was just profit taking. And if you want an opportunity to get into the market, if you like it at 123, you're sure as hell going to like it at 114, right? And now we're at 116, almost 117. We're bouncing back very quickly. So if I pull up a 1 hour chart on it, there it is again. There's that buy and the dip mentality right there. We know where it's at. So we haven't stopped here buying. Nothing has stopped the train. We're still going higher. I pretty much think by the end of next month we'll be making new highs again. Now, we know August and September are not normal months. We know that August is usually a month where there's a little bit of a pullback, a little bit of profit taking. We know that. We know we're going into the end of the doldrums of the summer. We're going into the fall where there's usually an issue. We know that. Markets usually pull back here as we realign, or as we call it in Wall Street, window dressing. And when we do this, we look for entries back into the market, right? But if you are a long-term investor, you're not doing that. Why? Because you're just causing yourself more an IRS headache yourself, right? You're going to have to pay tax on that. And so unless you, I guess, obviously live in Puerto Rico and a few other places, but the truth of the matter is most of us got to pay tax on this. So why take that off? I'm not seeing it. I'm seeing the basing. I'm seeing another buying opportunity. That you're seeing the MACD also. If you're a trader that looks at the charts, you're seeing the MACD. You're also seeing RSI turn around on so many different levels. So I like this dip here, and I'm very, very long now. I'm going strong again now.
Yeah, but with any dip, it makes me wonder, do you think that's going to shake out some of the weak hands in the market, or maybe even scare off some of the new investors into the space, even if there's, people that have been in the space for a while, they're like, hey, are seeing this as more of an opportunity? Do you think that has any short-term effect on these weak hands and potentially new investors?
I wouldn't know about weak hands because mine are diamonds. I keep diamond hands, Hank. No, listen, you're totally right. There are a lot of weak hands in this market. They don't know, oh, I didn't get in. You're all lucky because you all got in early. There's no such thing as luck in this game. The markets itself don't care about your feelings. It doesn't understand your feelings, doesn't know it's a mechanical machine. You buy, you sell. You put orders in. That's it. The machine itself is built on other people and other algorithms. You're literally facing yourself against institutions. You're literally facing against people like myself who has been in a long time. Why fight that? Just buy the dips. Don't go full boat, as I always say. And every time you do that, make sure that you're doing it in a way that doesn't hurt you. When these dips happen, if it's $100 or $1,000 or $1 million, it doesn't matter because we're going in one direction. But when you do see these pullbacks, don't get scared. Be happy. I love it when things happen like this. This gives me an opportunity. But at 124, Hank, I did it on your show, I took profit off. I said, okay, look, it's had a nice run. Okay. Let's take some profit off. But I didn't sell all of my Bitcoin. I sold 10%. I didn't take all of my Ethereum off. I sold 10%. Why? Because if there was a 10% pullback, I'm buying right back in. And guess what? I've stacked sats. That should make you happy. Continue to trade the markets. We're all traders. We're all investors. But when we do it methodically. Do it with no, and I always say this all the time, with no emotion. You should have zero emotion. Get rid of that thing inside of you that says, oh, I got to be in, or I got to be out of the market. Oh my gosh, what's happening? I can't wait to look at what the next Twitter feed is happening and tell me what to do. Don't let anybody tell you what to do. Look for yourself. You have the same charts that I have, but learn, educate yourself about Bitcoin. What does it do? Why am I doing this? Why am I investing in Bitcoin? Why am I not investing in other companies or stocks? Why? Because you heard it directly from the Powell himself, from the Fed chair. He said himself, Bitcoin is digital gold. The chair of the Federal Reserve of Banking also told you that Bitcoin is like digital gold. Well, if you know that, you know that he's now accepting it. The guy that told you 4 years ago, don't do that, or I'm not investing, I wouldn't invest in it, or we're telling our banks not to invest in it. We're telling our banks not to be a part of it. We're telling banks to close your accounts because of it. Is now telling you that Bitcoin is digital gold? You already know what the answers of the banks were thinking. So if the banks are on your side, the ETFs are on your side, the JP Morgans, Goldman Sachs are on your side, and retail is on your side, who's against you? Nobody. You're just betting against yourself. So why bet against yourself in the wrong direction? Just keep adding. Now, would I tell you to keep adding when the markets are fully invested? No, heck no. But we're still in the first or second inning of Bitcoin. I don't even think we're in the first inning, to be honest with you. We're just in the beginning of all of this, right? So when I see that, yes, I get it. But I heard the same arguments back at 19,000. I heard the same arguments at 65,000. I mean, people thought the world was ending when Ethereum hit 1,500. It's at over 4,000, right? It's not ending. It's just the beginning, right? So you just have to scroll those charts out, raise up your time frame, and understand what you're investing in. Once you've done that, you don't look at your charts anymore. I'll show you charts all day long. I'll show you what every news article out there is. I have it. But if you're thinking about it from the perspective of your kids, your future, what you want to buy, a house, a new boat, you're going to get all that stuff if you just stay squared away with Bitcoin.
Yeah, ultimately it comes to how much conviction do you have in this asset class, and that's something that seems to be bolstered within all of us once we take the time to do the research. I mean, the writing is clearly on the wall. We have our government saying we're making a strategic Bitcoin reserve, even if they're not coming out and saying they're buying it just yet. We have the evil empire itself, BlackRock, accumulating Bitcoin for IBIT like it's going out of style. With that being said, though, anyone who's been in this market or in any market knows you can't ever officially or truly time the market itself. And a lot of traders will say that Bitcoin never gives you the entry point that you'd want or hope for. Do you feel that waiting for a big dip is the play? Or does it usually mean you're going to miss the next move and you should just be dollar cost averaging along the way? What do you feel like is the most effective play?
You know, Hank, on my desk, I have a crystal ball. It still doesn't work. I can shine it up. I can put glass X. I can do all that Windex on it. It still doesn't work. So why try to make something that doesn't work? I've got a microscope over here to help me understand the minutiae of the markets. It doesn't work. You know what works? Dollar cost averaging. It's very simple. If you've got $1,000, $10,000, or $100,000, break it down and say, okay, this is what I have to invest in Bitcoin. This is what I'm willing to lose or whatever. Okay, and this is my time frame. My time frame's a year. My time frame's 10 years. Whatever it is, divide it out. So if a market goes up and you have $100 of Bitcoin, okay, you have more Bitcoin. If it goes down, buy another $100 of Bitcoin. Break it out into tens, hundreds, whatever it is you need to break it out. But dollar cost averaging has worked in Bitcoin since literally the inception of Bitcoin.
Yeah, absolutely. And when Bitcoin has a little dip, like we've seen in the last couple of days, are you still looking strictly at Bitcoin and accumulating more sats, or do you look at maybe some altcoins as potential bargains, or are they just landmines waiting to explode while you're looking out for a little bit higher of an alpha play in the short term?
Man, 100% question. I love that question. That's a very good one. In fact, I will tell you the one that I have been, that I also now am in accumulation phase is Solana. I'll pull it up, Solana. Hopefully you can see the chart here. I loved this dip on Solana. If you can see this chart right now, look, at over 200, I thought that was just nuts. Thank you. I took my profit there, 208. It went up a little higher. Okay, I felt like, okay, did I make a mistake? No, I didn't make a mistake because it came back down. It got down to about 185. Now, why was that a concern to me? Right here. You saw back here in July that those tops became bottoms here. So there they are. They started to melt them up a little bit, and I bought back in. Okay, it had a nice run, about a good 10% run. I took it off again, bought back again. I'm under at 180, I'm buying again. So I bought some more here. I'm holding it here because I think that there's a big gap in here. So I think maybe 195, 200, and if we can break that, we'll be back over 200 handle and right back to 204, 205. I like Solana. I like what it does. It's if you're looking at meme coins without buying meme coins, well, this is the gas that makes it happen, right? So Solana. So I do like Solana quite a bit. I think this is one that is also being accumulated. I'm going to pull up a monthly chart. A good example of that right there, Hank. If you didn't like it at $5, $10, it went straight up. It's going again. I think it's going to make another run here. You saw big runs back in the early days of 2021. That's what I'm saying. If you didn't like it there, great, and you sold out or you didn't sell out, you're still in the profit. You're still buying back in here, back last year and the last couple of years. So I'm not too concerned about it. Just keep buying. You're fine. I'm not telling anybody to buy meme coins. I think I'm not a big fan of meme coins. I never have been. You just said to yourself, is this a market where you time it? No. Is this a market where you try to pick out the winners and losers? Yeah, if you want to. It's a stock picker's market. It might as well be a crypto market picker market. But I don't like that. You can also look at Ethereum. I think you just asked about Ethereum as well. Same situation, right? Yeah. If you got really scared back at $2,000 back at the beginning of the year, early part of April and May, you're out. Guess what? You missed it. You missed this last run. And look, you can look at MACD. You can look at linear regression. It's giving you the same answer. But the truth of the matter is, if you're pulling this is a monthly chart, it's the same situation. Look at those bottoms right there. So you know right where to buy. If you say, I don't know where to buy, or I missed it again, you know where they are. So if you've got a little patience, it's always good. If you don't have patience, great. Just keep dollar cost averaging. You'll be fine.
Yeah, and Ethereum is an interesting one because in previous cycles, it seemed to move very much in tandem with Bitcoin. It reached its previous all-time high of 4,800 last cycle when Bitcoin reached 69K. We almost touched new all-time highs in just the last week until we saw about a nice little dip itself with Bitcoin kind of coming back as well. Do you feel like these two coins now are completely different stories? It used to feel like where Bitcoin went, Ethereum was sure to follow, but it seems like they're kind of running on two divergent paths right now. What are you seeing from Ethereum as opposed to how you had seen it go in tandem with Bitcoin maybe in previous cycles?
Well, I think a lot of it has to do, in this case, there is news around it, right? It's who's accumulating, right? Michael Saylor being the biggest accumulator right now of Bitcoin and saying, again, he's buying more Bitcoin, which it looks like he's doing it today, right? But Tom Lee is really getting into the ETF side of the Ethereum, saying, look, if you're looking at crypto in general and you want to buy the gas station, you want to buy that, then great. Then you want to buy Bitcoin. If you want to buy the actual feeling of the gas going into the car, that's Ethereum, right? So there is a divergence a little bit going on, but the accumulation of it from the institution side is now happening a little bit faster now on the Ethereum side and Solana in a lot of ways. But you're not seeing a difference, right? If I cross references the difference between Bitcoin and Ethereum, it's not really showing that too much. Look, I get it that one day Ethereum is up and Bitcoin is down a little bit and vice versa the other way around, but it doesn't really matter to me. I'm not trying to trade it, or I'm not trying to time it. I'm not trying to accumulate it based on what Ethereum is doing, what Bitcoin is doing today. I'm just doing it based on when you look at pasts. Right. In the past, Bitcoin has a great cycle. You can tell you with the halvening. You can go with the Bitcoin cycles of, Plan B and all the different things that you see out there. Right. None of those really matter to me. It's about accumulation, and I want to own them for the future. Why? Because we are already seeing the changes in real life, meaning how we use Bitcoin and how we use Ethereum, and you're seeing more and more companies using Solana and Ethereum, and they need more and more of it to be out there, right? Why is this a big deal? Well, I think a lot of it people are concerned about how much are on the exchange, right? Are the whales dumping onto the exchange, or are they pulling it off into their own hard wallets? Again, I just don't care. As you said at the last show, we were on the whale games. Again, I don't care. I'm not waiting for it. I'm just saying, look, you know what? I like this area. I think I'm going to accumulate. Boom, I do it. So in this case, you can see we're not even with this pump here on over the 4,000 handle. This is a 3-hour chart. If you don't know, I think I said this on the show before. Number threes. Stick that in your head, because that's what Wall Street's looking at. You saw it here on the 3-hour chart. Back here on the 10th and the 11th, there was accumulation phase right here before the last run. Okay, so this sell-off happened in 1, 2, 3 threes. You can see it here, the accumulation phase. This was the tops. Now becomes your support. So in the support and resistance situation here, I think we're going to run back to 4,500, make another test at it, maybe 4,478. We'll test that and then go, if we break that, 4,664, and then off to the races. And then at 5,000, is that a good time to buy? Probably not, but it could be. Because why? Because you're in it now at 43. So that's why I'm saying, this is what I'm talking about when I talk about accumulation, right? But if you liked it back at 3,900, you sure as heck liked it at 4,300 in the tops, and then you sold off. So you went from 4,300 down to around 4,200, and you were unhappy. But all of a sudden, it made a nice run. So did you get out? Okay, no, but you own more Ethereum. Great. Now, did you buy more to capitulate against that? Hopefully, yes. If you didn't, and I don't believe in hope and luck, now you got a good chance. So you talk about when it's strategy to buy. This is your strategy to buy, and I do like this time frame here.
And you talked about the support level for Ethereum, which brings me to talking about the support level for Bitcoin. We bounced back. We went all the way to, I think it was 114,700 or something. We saw it bounce back above 15. Do you think that 114 level is kind of the line in the sand to watch for BTC right now? Or if certain information doesn't go our way in the future, maybe the Fed doesn't come out with the rate cuts we're expecting, could we see Bitcoin tumble closer to that 100K psychological mark?
Yeah, it could tumble to about 112. As I said in the earlier part of the show, right? We got to find out where our tops were, our resistance in the past becomes our support. So we saw it here This is a weekly chart. So you'll see the support here. I got all the way down to about 112.5. You saw here the support got into 112.6. We could test that 112.6 handle. If we do that, then yes, then your next level is 110.5, as you just mentioned. Do I see that happening? No, but there are some technical indicators saying that there's a good chance it could happen here. MACD, you're seeing it here in the weekly charts. But if I pull up a daily chart, where I think a lot of people are, you're seeing that line that I just drew, right? There it is at the bottoms. And I think we tested it this morning and then right back up. You saw this nice little bounce. Why? Because there's the support in the past, right? And then there's the resistance that we didn't even get down to in the past. So I think right here, the resistance in the past, which was back only in September the 5th, July timeframe, now you see it happening again. So we're going to push right back up. I think we go back and test 120 very quickly. Probably just be a pump maybe sometime this week, especially if Jackson Hole comes out and says, okay, you know what? We do see that inflation is okay. We see the job numbers. We understand. If I told you that the whole Jackson Hole symposium is based around one thing this time around, it's jobs. And we know there's cracks in the market when it comes to jobs. AI has taken some of those jobs. We're seeing some problems with immigration, so that we know that there's an issue with it. So guess what? The Fed's going to back off, and they're going to say, you know what? Maybe it is time to start the cuts now in the interest rates, because we need to pump this a little bit, right? That means risk on. And Bitcoin and Ethereum and Solana and the coins, they are a risk on asset. They're not a risk off asset. They're a risk on asset. But they are risk on because we're building with it. We're creating with Ethereum and Solana. We're creating a new level of how we move around the world with finances. So with that being said, I think we're still in the beginning. If I pulled up a monthly chart of Bitcoin, this is what I see. There's nothing stopping it. That line's going all the way out. The last time we saw this in a monthly chart was back in June. At June, it was at 103. So here we go again. The last time we saw this was back in December in your monthly charts. Last time we saw this spinning top was back in January. So all those three times was just a pause moment. It wasn't like, oh my God, I've got to sell everything and go away. It was a pause moment, and we paused and we ran back up.
And big picture, heading into September, what's the one number on the chart that everyone should probably be watching between now and the Fed's September meeting? Is there a price that you think we should really be keeping an eye on that could be a big inflection point depending how things go in the future?
Yeah, 112.5. I think 112.5 is the hot number. I think a lot of people are looking at that number. Why? Because that was the number as the resistance back in the end of May. 112.5. Look, there are a lot of buyers at 112.5. There are a lot of people that are looking to really kick in some serious cash. But I don't think Michael Saylor is saying, oh, look at 112.5 or look at it 115. He doesn't care. He's just buying because he knows one thing. It's going to $1 million, according to him, right? So what does it matter to him if he's buying at 112 or 105 or 100? He doesn't care. He's going to buy, accumulate all of it because he knows it's going to 10x his money. So he doesn't care. And I think that's what we have to watch, right? I don't think IBIT's the same way. These zero DTEs and derivatives that we're seeing and these short hands and weak hands that we've been talking about, okay, great. Have fun. Enjoy that trading because you're going to do okay sometimes and sometimes you're not. That's fine. But you know what? People look at me like, oh, my God, you bought at 75. Well, you should be happy. I don't care where it goes, right? But I care about it now. I care about the future, right? I want to see the market push higher. And if I thought the market was done, if I thought the whole thing was going to end, why would I continue to be in the Bitcoin market? I wouldn't. I'd say, forget about it. I don't care. Right. No, I don't. Because I know we're going higher. And that's all in my mind that I think about right now. Oh, well, Bitcoin, Steve, big beat. You're just bullish, bullish, bullish. I am also a bear when it comes to being a bear. I know I need to be a bear, but this is not a bear time. There's bears not roaring today. It's still about the bull and the horns. We're still going higher.
Yeah, absolutely. And I'm glad you brought up Michael Saylor too, because this guy, he keeps buying Bitcoin like a man possessed. They announced the purchase of another 430 coins just this week. So it begs the question, do big players like Michael Saylor's strategy actually put a floor under Bitcoin, or is that just a nice headline for all us to read about the continued bullish momentum?
I'm going to take Michael Saylor at his words. He said, if Bitcoin goes to zero, I'll be buying a lot of it, right? He told you that, right? And you're not just hearing it from him now. And, Michael Saylor was the finger in the wind, right? Licking the finger, put it up, and he was testing that wind. He knew about this Bitcoin thing at a very young. He started with, MicroStrategy was never about crypto. Right, he knew about it then. So he knew about it so much that he even changed the name of the company to Strategy. Right, so when he did that, he understood what the future was like. Now I'm about to go on another show and talk about the strategy of Michael Saylor and explain why he's thinking this. He did a deep dive into Bitcoin and of itself. Look, Hank, I did the same thing. When I first was talked about Bitcoin, it was at 75 cents. And I gave every reason why Bitcoin was never going to be here. That's right, 75 cents. I gave every reason in the world why Bitcoin was going to fail. I mean, I can say the pizza guy again, right? That poor guy probably still hates life, right? In the most expensive pizza in the world. But I understand that. And do I want to be that pizza guy when it's at $1 million? No, I don't, right? I think one of the things that people say all the time is if you just had one Bitcoin, you're going to be rich in the future. Right? Because why? There's only 21 million. And we talk about this all the time on this show. Why? Because not everybody can have one. If everybody had one Bitcoin, then the Bitcoin would be $100 million. It wouldn't even be one. And we continue to talk about Bitcoin in US dollars, even I did today on the show. But when I'm overseas, they don't talk about Bitcoin in dollars. They talk about it in yen. They talk about it in euros and pounds. The arrogance of the United States to think, or Michael Saylor to think that it's a US-centric product, it is not. It's a worldwide product that people are accumulating, right? In Seoul, South Korea, it's illegal to gamble. You literally go to jail if you gamble. This is the way that they get to invest, right? So they don't care what the price is. They know which way it's going up, right? In Australia, they're doing the same thing. In Japan, they love it, right? It's the same thing in the LATAM areas. They're doing the same thing. They're accumulating. And so it's arrogant of us in the United States to think that we're going to be the ones that controls Bitcoin. Nobody controls it. It is literally on a blockchain. It's literally living in everybody's computer that has this. So when I talk about the blockchain and in general, you can't talk about the blockchain. We talk about how we actually use it, right? The layer ones and layer twos. We are using layer two on a whole different level than we ever did 10 years ago, in ways that we never even expected. Gaming on layer two. On level one, you want to have microtransactions. We're going to buy Bitcoin Lightning lanes, right? This is much faster. So how we integrate Bitcoin and integrate these cryptos is getting a little bit different almost every day, and we're growing. We're not going backwards. We're growing the way that we actually use it. When I go to Europe and I go to Asian countries, I got to carry fistfuls of yen and I got to have pounds for the UK, and I've got to have yen when I go to Japan, and it gets boring. I want to bring my cell phone with me with my crypto, right? It makes it a lot easier and be able to transact. You couldn't do that 10 years ago. Now we can, and how that we interact. So when you talk about charts and we talk about the interaction of what we're doing, what does that mean? Is it going to be 116.5 in another year? No, it's probably going to be where Tom Lee says, $250,000. It's going to be where Michael Saylor says, $1 million. If these guys have, and they have buku bucks and able to buy these things, then why wait? Why waste your time trying to find out if it's 116 or 112 or 120 or whatever? Because we know where it's going, because they're telling us where it's going. Why? Because they do have the means to buy it, to send it there. So send it to the moon, to Mars. Let's go.
Yeah, and we're at a really interesting point in Bitcoin's journey right now, right? Like you said, it's an asset for the world. It's not just an American thing. For instance, the Japanese company that cosplays this strategy, Metaplanet, just stacked another 775 coins themselves. Right. Do you think the kind of corporate FOMO that we're seeing right now changes the game for retail investors at all? Or are we still in that weird arena right now where retail's feeling priced out and they're not even listening to what's going on the institutional side of things?
That's a great question because, look, I've said this from the get-go. Crypto's about one thing. There was one thing that's slowing down a lot of people in the retail sector, and that's education. There's a lot of us that are nerdy and we get it and we understand Bitcoin now, but the truth of the matter is it's education. We need to educate people. I hear the story all the time. I can't afford a Bitcoin. You don't have to buy one. It's just you buy bits of it, Satoshis, right? Educate them first, right? Okay, get a Robinhood account, get a Kraken account, get a Coinbase account, start slow, understand what you're investing in, and as you do, accumulate. We talked about the accumulation phase already. But when I look at it from international, the FOMO, let's go back in time a bit. Let's go back to the dot-com era, right? In the dot-com era, at the very beginning of that, there were only a few websites. There was Microsoft, there was IBM. Apple wasn't really even a player back then, believe it or not. Amazon wasn't even a company then, right? When we look at that, we had companies that were just going crazy. If you put a .com in your name, the stock jumped 40, 50, 80, 100% just by doing that. You could literally take a dart and throw it at the wall of stocks and hit it, and as long as it had .com in it, you were going to make money, right? The same thing happened in the wild, wild west about 5 years ago in Bitcoin and crypto, right? It didn't matter what coin it was. You could pretty much buy it and make money. Okay, well, we are in the adult phase of Bitcoin, in the first inning of Bitcoin, but we're growing up. Why? Why do I say that? Because regulations are coming out. On the last show, we talked about regulations. Again, it's arrogant in the United States to think that we're going to lead. The whole world leads in crypto. Right? So I want to see us creating regulations that put the frames on it and said, look, okay, it's okay to invest. It's going to make everybody a lot happier, right? If you think about it at the beginning, when the Buttonwood Agreement was created in the 1780s, right, for the New York Stock Exchange, it was just a bunch of guys getting together in a corner in New York City saying, I want to trade stocks of my company, your company, you can invest in my company. We've grown up since then. And since then, it was done in quarters and halves and dollars, right? Over time, we put it into digital. And in digital, it went to where we are today, right? And most people don't know this, but not one stock is actually traded on the floor anymore. They're all done in computers in the back end of New Jersey, right? It grew up. We had to grow up. It had to grow by technology, and it had to grow up. So the speed of the technology happened over 300 years. Right, 1700s to now, right? What's the speed of technology now? It's faster than even Moore's law. So if that's the case, why would you wait to buy Bitcoin and crypto? Oh, well, because Michael Saylor now owns it all? Well, you want to keep him owning it all? Buy some. You want to keep JP Morgan and Goldman Sachs from owning it all? Buy some. You want to own some for your kids' futures and your kids' education? Buy some. Don't wait until there's none to be bought, right? If I told you right now, 94% of all Bitcoin's already been mined, and there are miners mining as fast as they can. They're selling some of their Bitcoin in order to buy bigger and better and faster machines, more hardware in order to speed it up, the mining. So it's not slowing down, it's speeding up. Why would I want to wait till it's $250,000? Why do I want to wait until it's now $1 million? Oh, it's too late now. Or I could have bought it right here on Hank's show for the Blockchain Report and bought it right here at 116.5. That's what I'm telling people.
Yeah, absolutely. And one of the things you mentioned is the speed upon which these things happen. And while a lot of these technological advancements you gotta like, we can trade whenever we want, anywhere we want in the world, I wonder if part of that is intimidating to retail markets, right? That people out there feel like there's no way they can compete against these big institutions that are just backed by billions and billions of dollars. But your platform, Quasar Markets, is setting out to kind of level that playing field for everybody. Could you tell us a little bit about what Quasar does to kind of put everybody on the same field so we actually have a chance against the big boys out there?
That's a great question. Thanks for asking about Quasar Markets. We're doing quite well here. It's very simple. It's the decentralization, just like crypto, of data. It's not fair that the big boys have all the data and have it in their hands. What if I could give you the same data that everybody else on Wall Street gets and put it in your hands? What if I can AI that? What if I can give you data that you have, but you can get data too, but you don't know how to use it? We want to educate you on how to use the data. Okay, you got the jobs numbers. What do I do with that? What does it mean? Okay, you've got the fixed income data. You know what the 10Q of Microsoft is lately. How do I do it? What do I do with it? How do I use it? How do I implement it? Educate them. Put into AI. Create a whole symbiotic relationship with the machine so that you understand what the data is and be able to get the same data as institutions and do it in a way that doesn't cost you an arm and a leg. We got it right now for $15, the whole platform, right, Hank? That's ridiculous. Right now, a massive platform like this, $2,500 a month. I'm trying to get it so that everybody has that same playing advantage. When you talk about it from this perspective of a retailer themselves, right? 10 years ago, there wasn't an app on the phone where you just went in and I wanted to buy stock. You could do it on a few banks, which I did. If I go back another 5+ years on that, you had to make phone calls to your broker. That's 15, 20 years ago. That was not, that was not a long lifetime away. For some people it is now, right? But if you fast forward to today, how many Robinhoods are there, and E-Trades and Fidelities and Moomoos, all great companies doing wonderful things and moving the needle forward. But they're not giving the same data that we're going to give you, right? I want to give you the data. I want to give you the ability to trade on all those platforms in one place, on one ecosystem, to make it a whole lot easier, to put it all into one place. Why is that important? Why is that a big deal? So you don't have to have 25 screens. I just want to because people aren't living like that anymore. They're not living behind huge screens like we do. There's a few of us that do still, but people are living behind their mobile apps. What if I told you in the future you don't even need an app? If I told you right now, out of the 100 of apps you have on your phone, you're probably only using 5 or 6 of them. We took all of the apps that you have and shoved it into one app, into one machine without having to have an app. We also made it in a way that you could understand these charts just the way and have all the different things in the charts, all these technical indicators right in the chart, right in your one desktop or your one machine or your one phone, right? You want to hear what's going on in those earnings calls. We've got that too. You want to know what's happening in the news. You want Bloomberg level news. We got that too, right? So that's what I'm saying when I say democratizing, giving everybody better data. I've talked to several people. I have a dear friend of mine, Nerd Street Games. He talks about it in an easier way to understand. Growing up, when I was growing up as a kid, there were only 3 channels, ABC, CBS, and NBC. Those are the 3 channels. Today we have millions of channels. Well, which one do I watch, right? What YouTube channel do I turn into? I know one I'm going to, RoxomTV. But I'll tell you, when you look at that from that perspective, right? People today can handle more information. They're already ready. Children being born right now will not even know what the world's like without the internet or Web3 by the time they're 16, 17, 18, right? Kids that are now 18, 19 years old today didn't even know what the world was like before the internet. So they can handle, they're already absorbing more and more data at the speed of data that we didn't even understand data was going to come out at. Right? I mean, back when I was starting, it's 14.4 and 9600 baud. I mean, 28.8 was, oh my God, and 56K was beyond worlds. Today, you got to have fiber in your house or you don't know what you're doing, right? And that's happening very quickly. So the speed of data is coming in, the amount of data that we can consume happens, but how do you digest all this? Is it too much information? Is it overload? And we made Quasar Markets for that very reason. So we can boil down all of that into an easier digestible situation. In our AI, we don't have one AI. If you're just using ChatGPT to get your answers, you're missing the point. We have over 18 AIs in our system and patented, right? Why? Because we know that the narrative has to be rewritten for you. We know that you need to be able to see it the way that you want to see it. If you have a PhD behind your name, you're not going to want to see it at a very low level, at a 5th grade level. But if you're a 5th grader and you want to see it at a 5th grade level and you want to see it at a high school level and learn faster, the machine will make it for you, right? It's learning about yourself, natural language processing, as well as large language modeling, as well as visioning prompting too. I think that's important, right? The visualizations of it, of the AIs. And that's why we won. And I appreciate you asking that, Hank.
Oh, for sure. Well, I mean, you literally have a product that is making it a better place for all of us retail traders out there to have an actual chance against these gigantic whales in the sea when we're all these little minnows trying to make our way. So I think it's an important thing that we bring up because the data tells the story. And right now, the data is telling us that we still have huge inflows into ETFs, but spot buying from retail has felt very quiet as of late. It makes me wonder, does retail even matter anymore going forward? Is the market just driven by institutions now, or is there going to be a place where we see retail hop back into this market once they start getting that information and start realizing what Bitcoin really is?
Yeah, that's a great question. I even hate the word retail because that whole philosophy is changing too, right? Institutions want to know what the retailers are doing. You don't think so? Ask Citadel. Why is Ken Griffin paying Robinhood all that money to understand the order flow, right? If you're on a platform that's free, you're the product. right? They're using your information, your data to understand what you're thinking. I love when people say, well, if you just want to know what's going on in the world, ask a retailer. I'd rather ask Ken Griffin because he's the one who's got all the data on it, right? I've said this in the past. Yeah. In the past, the difference of the haves and the have-nots has been based on money. How much money you have in the bank, in a regular old bank. How much do you have in investments? That's how we decepted. Just ask Elon Musk, right? Or Mark Zuckerberg or Jeff Bezos. In the future, it won't be that. In the future, it'll be how much data do you have? You'll be able to sell your own net worth. You'll be able to sell your own data in the future. We're looking at that now, right? Quantum computers will be able to give you a social score and all that. That's coming, unfortunately. But the retailers want to know what the institutions are doing because they're always asking, how much money is Michael Saylor putting into it? By the way, folks, Michael Saylor is an institution. People want to know what iBit is doing. iBit's an institution, right? They're not retailers. They want to know what you're doing. And guess what? They're doing the old thing we call the floor, front running you, right? So why do you think that you can beat them? You can't. Yes, you can for 5 minutes. We saw that during COVID, right? Where stocks like AMC and GME ran hard and kept going up, and we crushed a few of those big firms, right? Institutions. But guess what? They won because they went right back down, right? As I always say, retailers can win a battle, but institutions always win the war down the road. Now, with that being said, retailers can win the war too if you have the data, if you have the knowledge. Right? On our platform, we talked about this not too long ago. I knew about Warren Buffett and the rumor of Warren Buffett buying UNH. I talked about it on Schwab Network, right? That this is going to happen. It did, right? How did I know that? Because I knew the data. It was on Quasar Markets, right? It was on the news. That was inside baseball. Listen, Ken Griffin knew too, was also setting himself around it, right? Was also what Jamie Dimon was building around it. UNH was building. You saw buyers stepping in. You saw heavy call buying before the news came out. It wasn't a rumor anymore when it came out. So that's what I'm saying about getting data before anybody else has. I'm not telling you to front run. I'm telling you to just absorb it, understand the markets around you. That's how it's going to make a better player. And Hank, when you talk about it from the retailer perspective, retailers become institutions very quickly, right? What do I mean by that? Yeah. Well, a lot of people are quitting their jobs to be a full-time trader. That's awesome. But understand, if you're going to quit your job, you better be able to pay your bills. You need to be able to protect yourself, right? If a downturn happens in the markets and you're the wrong side of it, ouch, got to go back to work. And nobody wants to go back to work in a job that was less than the one you had before. So as you build yourself up, invest, create those nest eggs, create that ability to go forward. So as we see that, the kids are not going to JP Morgan and Goldman Sachs and saying, Mommy, Daddy, please invest the way that you used to invest. Got A.G. Edwards and Edward D. Jones. They're saying, I want to do this myself. But they want to do it because they are accepting the knowledge faster. They're understanding the markets better than we did as we started this out. So when you're looking at that, the institutions are looking at what the retailers are looking at. They want to know, why did you buy AMC and GME? Why? Because it was the most heavily shorted stock on the markets. Why? Because the numbers did not add up. They had a terrible CEO, and now they got a great CEOs. So all of a sudden, that data, that news, those PRs that were coming out, they had a much better understanding of the markets. And now you've got a much smarter retailer than you had 5 years ago. And because of that knowledge, those kids become better, and those kids now become the institutions. Michael Saylor was, believe it or not, at one point was a retailer. Jeff Bezos was a retailer. Yeah. Mark Zuckerberg was a retailer. It wasn't until they got knowledge, until they started building machines that got knowledge. That's when they got rich. It wasn't because they were buying and selling zero DTEs. They bought it because they had data, because they understood the markets. That's how they got rich. They built platforms based on what they knew to build, right? And so guess what? The platforms in the future are going to be built on Ethereum, Solana, Bitcoin, layer 1s and layer 2s. So why not be a part of that and not against it?
Yeah, I mean, the game has changed in so many different ways, from the access to data itself to the accessibility. And the game has really changed for Bitcoin too. As a big narrative this cycle has been, this isn't like other cycles. We may not go through the normal halving cycles anymore, very much in part because of all this institutional money at play. But something you mentioned earlier that's super important is the amount of Bitcoin, or the percentage of Bitcoin that has already been mined. Right now it's about 94% of all Bitcoin has already been mined. So that makes me wonder, does that make dips like we saw in the last day or two here less scary because supply is so tight now? Or is that just kind of a long-term story and we don't really have the proof behind that yet to really say one way or the other?
You know what's interesting? I talk about this all the time. Like, when you look at it from the perspective of other minerals or oil or gold, and I told you that it's gone. There's no more oil in the world, or there's no more gold in the world, and we still need gold, and we still need oil, and we need still all. If I told you we need more lumber to build homes, we need more whatever the commodity is, nickel in this case, tin, tungsten, molybdenum, which is we need in TVs, right? Is gone. Which is happening, right? These things are going away, right? If you look at it from the oil perspective, the Ghawar in Saudi Arabia is running out. If I told you we're running out of Bitcoin, would you go out, run out and buy it? You and I would, because we know where that's going, right? That's what I'm saying with education. Yeah. We got to educate them that, hey, 93.8% of all Bitcoin's been mined. These dips, 90% of it for me is literally derivatives and money flowing back into it. It's not all just miners dumping. It's profit taking on their profit. And guess what? When you sell your physical Bitcoin, and I say physical, you know what I mean? It's gone. Mm-hmm. Right? If you're going to buy it, you got to buy it back either cheaper or higher. We don't know, right? You don't know if it's going to go down or up. Okay. But guess who is buying it? IBIT, Michael Saylor, Tom Lee, the same people we've been talking about. They can't wait for you to dump yours on the market. Yeah. So, we always say this whole adage about not your keys, not your coins. Well, you know what? It's actually right. So you better have your own Bitcoin that you own, not just in the ETF. People buy Bitcoin and ETFs because it's safer to them. It makes them feel better. But you don't actually own it. Right. You don't actually own it. If I look at it from the markets of the oil, right? So oil is now priced in futures markets, right? We have futures. So if you're a jet company, you're an airplane company, and you got to buy like United Airlines or American Airlines, and you're buying fuel for your jets, guess what? You're buying the futures contracts. So you're seeing a lot of more futures contracts being played. And guess what? Either have to roll them over at the end of the month, or you have to buy more, or you take what we call possession of it, right? Meaning that you take oil, you physically get those 100,000 barrels of oil. Where do you want them displayed, Mr. Orr? No, I don't want them. I want to get rid of them because I'm just playing the game here. That's what's happening here too, right? You're seeing a lot of people that are playing that too, and they're playing the ETF because I can put it in my 401k now. I can put it into my IRA. Great. But do you think grandma and grandpa and their IRAs are buying and selling Bitcoin every single day? Nope, they're accumulating. And when you have it in IBIT and these ETFs and these firms, those firms have to prove that they have it in their reserves. So it is coming off. But guess what? It's not in your account. It's in JP Morgan's and Goldman Sachs account. And they get to keep it in their account. And they may not want to sell it back to the exchange. They may say, okay, you might have sold it in your IRA or 401k or on your account, but we know what? We think it's going to go higher, so we're going to keep it. That's different. And they can play futures against that.
Right. There's such an interesting psychology behind this, and it all comes back to what we have spoken on this show many times, and that's the education expert. I remember when COVID happened. What was the one weird thing everybody sprinted to buy? It was toilet paper. We thought during the end of the world, the most important thing we had to get was toilet paper. Meanwhile, we have over 93% or whatever of the entire supply of Bitcoin that will ever be available is already gone and owned by somebody else, yet we are not here with the urgency as a population, as a total, like they're ready to buy it. And that's where the education thing comes down to, because we talk about, like, for instance, Robert Kiyosaki. We know him of Rich Dad, Poor Dad fame. He's on record saying he thinks stocks are about to crash, it's about to get really messy, and Bitcoin is the people's money. It makes me wonder, if the stock market were to tank, Stephen, do you see Bitcoin going up, or does it get dragged down with the rest of the market, even though it's supposed to be that digital safe haven asset?
That's a great question. There's two sides to that. A lot of people look at Bitcoin as the digital gold, as a protection, right, against the rest of that portfolio that you have. The answer is yes and yes. Robert Kiyosaki is correct. Everybody I've talked to on Wall Street, I was just there, as you know, last week as well. Everybody's feeling very nervous up here in these markets, the equities markets. Yes, even I am. I've sold a lot of my longer-term portfolio off, about 10 to 20% off now. When you look at it from that perspective, I haven't sold a single bit of Bitcoin except for the bit that I'm trading. I'm not going to sell any of that, right? That's put in my storage. I can't touch it. I that's what I love about it, right? But when the market goes up or down, the stock market goes up or down, I don't physically have those shares in my hands. It sits in Fidelity or Wells Fargo or whatever accounts of E-Trade you have, Robinhood accounts, whatever accounts that you have, it sits in their accounts, right? They're what they call a custodian for it. So in those custodian accounts, when you look at it from a Bitcoin perspective, let's say Coinbase or whatever, it's in their accounts, right? It's on their exchange unless you pull it off of the exchange. When I look at it from Robert Kiyosaki's position here, he owns quite a bit of it, right? And he's telling you that he thinks the markets are overheated. They are. I mean, if I told you Palantir right now, that PE ratio is well over 300 now. You can even say price to the stock itself. Whew, the PS ratio was outrageous. But in Bitcoin's perspective, the scarcity is now telling you there isn't a scarcity of stock. If a company wants to make more money, what do? They just go back to the well and sell more stock to you. They say, okay, I need more money in order to fund this, this, and this, so I'm going to dump on my own people that actually own the stock. And then people rush out to buy because they think it's cheaper. It's not cheaper. It's just because that there's more liquidity out there. There's no more liquidity here in Bitcoin. Yes, the people that own it can produce that liquidity and create that liquidity for the other people, but they have to sell it in order to make liquidity happen. And Michael Saylor told you he's not selling. He's diamond hands on top of diamond hands on top of tungsten hands. He's not selling. So if those guys aren't selling, why are you? Right? Why are the people out there selling? That's just silly to me, right? And the people that are selling, the buying, that is the 100Xers. It's the 50Xers. It's the derivatives off the derivatives. To be honest with you, I think if we did a hard-nosed deep dive into the derivatives around crypto, I don't think there's enough Bitcoin to supply the actual derivatives. Meaning those people who have bought long-term calls, those people who have bought calls against IBIT, I don't think there's enough crypto to actually cover that. Right now, there's not enough physical gold been mined. Now, maybe in the ground, but there's not enough physical gold to cover all the paper around it. There's not enough oil been produced outside of the ground to cover all the paper around oil. That's why the price is $61 a barrel. If it was, it'd be $500 a barrel. If we're running out of oil that fast. There's a producer on oil. There's a problem with the oil, right? Once you get the oil out of the ground, you still got to refine it into all the other things that make it. But that like gasoline or plastic or lipstick, all those things the things that oil make, right? Bitcoin is the producer of all the things that make the crypto actually work. The layer ones, the Bitcoin digital gold. So if you know that we're running out of it, if you know that the Robert Kiyosakis are buying it and the Michael Saylors are buying it, you know that the JP Morgans and the Goldman Sachs are buying it, you know that, I don't know how to say this, unfortunately, but when you look at the chairman of the Federal Reserve of the U.S. banks is saying it's digital gold, when you're seeing Jamie Dimon of JP Morgan go from, I hate it, I'll fire anybody who wants to buy it, to, oh, we own it, the world has changed. So why are you going against the ocean, going in one direction? It's like swimming uphill. Or as we say on Wall Street, it's like picking up nickels in front of a steamroller. No way in hell am I going to pick up nickels in front of a steamroller. My steamroller is going to be bigger and bigger and bigger, and I want to go forward. So how do I want to be positioned? It's accumulation. And that's just it.
And with all of these big institutions buying it and clearly not selling, right, that would seem to be indicative that they are very confident of the direction Bitcoin is heading. I mean, obviously we have Michael Saylor at Strategy. We have Kathy Wood over at ARK says Bitcoin could be like 900K by 2030. Max Kaiser says it could be upwards of 2 million by that time. But it begs the question for me, if we were to see Bitcoin rocket to $1 million in just the next couple of years, let's say 2030, would that actually be good news? Or is that a sign that the world we live in now is in complete and utter chaos and Bitcoin is the only thing people are saying is safe? So it's like, it's good for Bitcoin, but could it be bad for everyone else and everything else in the world?
Well, you said it yourself. The thing that everybody bought was in COVID was toilet paper, and they knew the world was ending. So why not buy the thing that protects you in the future? Bitcoin. If you think the world's going to end tomorrow, Bitcoin. If you think that the world is good in the future, Bitcoin. If you think the world is okay, Bitcoin. There's no reason not to own it. I mean, I've had several people constantly ask me, Steve, what should I buy? What stock should I buy? And don't say Bitcoin. I know you like Bitcoin. Bitcoin? I don't know what to tell you, right? At that time, there was around 90,000 back then, right? And yes, it went to 124. They were all happy. They finally broke down and bought it. Oh, now it's at 115. Now it's at 116, 116.5. Guess what? They're not unhappy because they bought it at 90,000, right? And they still didn't know what to do. They weren't educated about it. Now they're educated. Now they're accumulating, right? As more and more people get educated about it, and as more and more people accumulate, the speed at which we're doing this is going to grow even faster. And the miners can't keep up. They're buying heavier and heavier machines. So if you want to buy the pickaxes and you want to buy the gold miners themselves, it's NVIDIA, right? You need NVIDIA machines in order to make this happen, the cards, right? The computer cards. The video cards, but if you really are thinking that the world's going to end tomorrow, then it won't matter about Bitcoin or toilet paper because we're all going to die because of an earthquake or a hurricane or a flooding or struck by lightning. There's a million ways to die. That doesn't scare me. You know what scares me is not being in part of the future, and the future is Bitcoin. That's what scares me. Of not having enough Bitcoin. That's what scares me. I don't want to. If you think the world's ending, and you think Bitcoin's the answer, why are you not buying it? Doesn't matter what you think the price is today. If you think the world's going to do better in the future, and you think we're going to turn our faces towards being able to buy and sell products on Bitcoin layer 1 and layer 2, buy Bitcoin. I mean, it's not that hard to understand. Now, am I just being a bull about Bitcoin? Am I just being one-sided? Damn right I am. But I am also a bear when it needs to be. Right, and I understand those markets. I know when it's a bear market. I know when it's crypto winter, but crypto winter is over. Crypto winters were based on other factors back in the day, where the whales owned everything and the volatility was low, and there was concerns around regulatory environment. There was concerns around whether or not institutions would accept it. I've given you every reason. All those things are gone. All the reasons that made crypto winter happen are not around anymore. They're gone. Regulations are coming out. You've got a crypto-friendly White House. You've got a crypto-friendly administrations around the world. And if the world's ending and you think Bitcoin is digital gold, that's a protection, a hedge. Great, it's a hedge. If you think that that you just want to put it in your IRA, now you can. You want to put it in your 401k, now you can. All those things are gone. All those barriers that made crypto winter happen are gone. So here we are. So why would I want to be the person picking up nickels in front of a steamroller? I'm not. I'm going to be riding the steamroller and making sure my steamroller is bigger and bigger and bigger.
So I guess it's safe to say, Stephen, for our average investor out there who might be watching the show, your one piece of advice for them to survive this most recent dip without losing their mind or their shirt is just keep buying, keep stacking sats and secure your piece of our next financial future. Is that feel about right?
To the moon, Hank, to the moon.
To the moon, baby. All right, Steve, well, I know you got to go. As always, thank you so much for joining us on the Blockchain Report. Your insight and expertise as one of the most seasoned traders out there is absolutely invaluable to us. And before we let you go, one more time, if people want more of your insights or if they want to learn how they can actually get the info and data needed to trade like one of the big boys, tell them where to go.
QuasarMarkets.com. I think you'll see a much different, better picture of the markets. You'll get that information, and you won't have to pay an arm and a leg. QuasarMarkets.com.
Amazing. And they can always follow you. Is it QM Big Beat on X? Is that right?
QM Big Beat. And I also have a new website, QMBigBeat.com as well, if you want to see me there too as well.
Amazing. Well, make sure you guys go check it out. And if with the way things are going, I think we might have to change your nickname to Big Bull pretty soon because I love your bullish predictions and energy, and I know our audience does as well too, Stephen. So as always, a pleasure having you. We can't wait to have you back on the show real soon. Have a great week, my friend. Thanks for joining us.
Thanks, Hank.
Appreciate it. All right, we're going to take a quick break, but when we're back, more of today's top stories right here on the Blockchain Report. So sit tight. You won't want to miss it. We'll be right back.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
All right, it is 11:37 a.m. PST on this Monday morning. Bitcoin's back up to 116,600 right now, so it looks like we're moving in the right direction. And as always, want to give a big shout out and thanks to our main man, the big beat himself, Stephen Orr, for joining us on the show. He is one of the most animated and insightful guys in the biz, so we certainly appreciate when he takes time to share his wisdom with us. So thanks, Stephen. All right, let's get back to the news, gang, because Max Kaiser is back at it, and he'll actually be on the show later this week, so make sure you tune in for that. And he's decided that $220,000 Bitcoin was too boring. His new prediction, $2.2 million per coin. Yeah, you heard that right. A 10x jump from his long-standing forecast, and Kaiser isn't pulling numbers out of a hat. He's tying it directly to America's runaway interest payments. Now, over on X, he shared a chart showing how the U.S. interest expense has been increasing over the last decade, and saying that they want to lower rates so they can ramp this to $5 trillion. Bitcoin, $2.2 million incoming and underway. Now, the U.S. government has already burned through $1 trillion in interest payments over the first 10 months of the fiscal calendar year of 2025. That's the highest level ever at this point in the year, and it's on track to finish above $1.2 trillion in annual interest expenses. Interest alone. $1 trillion in interest. Rack your head around that number. That is not deficit spending. That's just the interest tab. And the slope of the chart looks like a rocket launch. You can see it right there. Look at just like a rocket. Oh, I'm going this way. There we go. Now for Kaiser, the math here is quite simple. The bigger the debt bill, the clearer the case for Bitcoin's fixed supply. He believes policymakers will eventually be forced to cut rates to allow for more borrowing. And when that happens, the money printer gets another workout. Bitcoin was literally built to survive that mess. Kaiser's logic, every uptick in interest payments is another argument for Bitcoin as the escape hatch. So if the debt spiral keeps steepening, don't be shocked if the price ceiling gets equally absurd. 2.2 million sounds insane until you look at the government balance sheet. Then it just sounds like simple math. And technical analysts are once again trying to scare you out of your coins. After hitting 124K, Bitcoin has dropped about 8% and confirmed a breakdown from a rising wedge pattern that's been forming since back in April. For the uninitiated, rising wedges are supposed to be bearish reversal setups. Higher highs, higher lows, then boom, the floor falls out from underneath you. Analyst Captain Fabek points to support at 110 and 112,000. But if we lose that, we're looking at 105 to 108,000 levels of support. And in the worst case scenario, a trip down to the 98 to 100K psychological level. And if things get really spicy, the measured target of the wedge points to as low as 88K. So basically, nobody wants that. Get out of here, you bearish nonsense. So basically, if the wedge breaks, we're talking about a potential 20% correction. And if you like historical deja vu, some analysts are calling this a 2021 style double top. You see, back then, Bitcoin hit 69K twice before crashing all the way down to 16K. This time around, the double top could send Bitcoin toward 94,000 by September if sellers keep pressing. On-chain data isn't exactly helping either. Whale wallets, so we're talking holding more than 10,000 Bitcoin, are at their lowest level this year. Or in other words, even the big fish seem to be trimming some profits off the top. But before you go full doomsday on me here, remember one thing. The Fed might actually cut rates in September and beyond. Just a 25 basis point trim plus global money supply growth could easily blow past these technical tea leaves and send Bitcoin back to 132K or heck, even 170K. So yeah, charts say 88K, macro says 170K. Choose your fighter wisely. And institutions are still playing by the wrong rule book, or so it seems. According to Jeff Park of Bitwise Asset Management, big money keeps trying to force crypto into the private equity and venture capital box. And it doesn't fit. Traditionally, institutions worship the illiquidity premium, the idea that if you lock up your cash for a decade in VC or private credit, you'll get paid more for the patience. Now, David Swenson at Yale pioneered this with the endowment model, allocating 70% to alternatives. It worked for them. But Park says in crypto, that framework is totally backwards. In fact, he argues the term structure is inverted. You actually get paid more for liquid risk than for locking yourself in. Or in plain English, the juice is in the short term, not the long term. Park pointed to April 2024 as proof. Bitcoin dropped 7% that month, but market-making strategies annualized at 70% and arbitrage pulled in 40%. Try getting that in a 10-year VC lockup. Meanwhile, institutions keep piling into crypto venture funds, treating them like the new Silicon Valley lottery ticket. Park says that ignores where the real scalability is: the liquid markets. In May alone, $2.5 trillion traded in spot assets and another $2.5 trillion in Bitcoin futures. That's not some boutique VC round. That's global liquidity sloshing around 24/7. And instead of seeing volatility as a risk, Park says institutions should treat it as the alpha generator. If the S&P 500 had 70% volatility, private equity returns would look very different. In crypto, we just call that Tuesday. Bitwise is leaning into this thesis with multi-strategy products that hunt for liquid alpha across arbitrage, market making, and trend following. Park even quoted Swenson himself saying, "Maintaining an unconventional portfolio requires accepting idiosyncratic risk that looks imprudent to conventional wisdom." To which Park added, "Sounds like crypto to me." So while most institutions are chasing the illiquidity mirage, the next real iconoclast will be the one who embraces Bitcoin's volatility, uses it, and stops pretending this is just another asset class to lock away for 10 years. Because in crypto, waiting is the risk, acting is the alpha. All right, we're taking a quick break, but when we're back, more blockchain report, including some bullish, bearish, or BS. So we'll break down what today's events are meaning for Bitcoin and its price as we're going forward. You won't want to miss it. Stay tuned. We'll be right back.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back. It's time for a little blockchain without borders because, like my good friend Steven said, this stuff is happening in other parts of the world too, so we better let you know what's going on. Because right now, it looks like the U.S. lawmakers are finally deciding to take a page from the old crypto playbook. A delegation of U.S. legislators recently packed their bags and headed to Argentina to see how this Latin American country has embraced the world of digital assets. The group, led by French Hill, chairman of the U.S. House Financial Services Committee, also included representatives Don Davis, Warren Davidson, Janelle Bynum, Troy Downing, and Tim Moore. Their goal? To get the lowdown on Argentina's rapidly expanding crypto market and how the country has managed to integrate digital assets into its financial ecosystem. You see, Argentina has found itself at the forefront of the crypto revolution in Latin America, driven by sky-high inflation and the relentless devaluation of its national currency. Faced with economic instability, many Argentinians have turned to cryptocurrencies like Bitcoin and stablecoins as a hedge against the country's financial turmoil. Now, during their visit, the lawmakers met with Argentine President Javier Milei and other key policymakers to discuss Argentina's approach to regulating digital assets. And according to local sources, the primary aim was to introduce the U.S. crypto policy frameworks, particularly the Genius and Clarity Acts, and see what Argentina's regulatory environment could teach the United States. One of the highlights of this visit is the fact that Argentina's crypto adoption model is largely grassroots driven. People aren't just trading crypto for speculative gains. Instead, they're using it to save their money and send remittances, real-world applications of crypto that go far beyond the hodl mentality. Now, Argentina's government is exploring ways to integrate this new financial model with the country's existing systems. And while the details on regulation remain unclear, the visit is a clear sign that Washington is starting to pay attention to how countries like Argentina are navigating the complex world of cryptocurrency. This visit shows that while the U.S. is still hashing out its own crypto policies, countries like Argentina are already putting in place frameworks that could be the key to real-world crypto adoption. So, while the U.S. debates, Argentina is out here building the future of finance, one Bitcoin at a time. All right, real quick, let's see what our robot overlords are up to in some AIO. Let's run the stinger, boys. All right, welcome back. Time for a little AIO. Let's see what our robot friends are up to now. Well, a group of American AI researchers went to China and they came back with one message, and that message was, we're totally screwed. Rui Ma, a respected China tech analyst, toured the country's AI hubs and said the difference was night and day. In China, energy availability is considered a solved problem. In the US, it's considered a congressional debate. You see, Goldman Sachs already warned that AI's insatiable energy demand is smashing headfirst into a fragile US power grid. And researchers saw it firsthand. You see, in China, no one even worries about whether there's enough juice for data centers. In America, we're still hoping the lights stay on during a heat wave. Data centers are now such a massive part of the economy that spending on them is overtaking consumer spending's share of GDP. McKinsey projects companies will plow $6.7 trillion into new centers between now and 2030. And Deloitte says the biggest choke point for the US is simple. The grid just can't handle it. So bad, in fact, that companies are literally building their own private power plants just to keep servers running. Meanwhile, Ohio residents are already complaining about higher electricity bills, up $15 this summer, thanks to data center demand. Goldman, well, they summed it up, saying AI's power demand is outpacing the grid's decade-long development cycles, which is banker speak for good luck keeping up. Now, compare that to China. They add more electricity demand every year than Germany consumes in total. Entire provinces are covered in rooftop solar. One province alone matched India's total power output. China deliberately overbuilt everything. We're talking generation, transmission, nuclear, renewables. Their grid runs at 80 to 100% reserve margin, which means they've basically got double the electricity they need sitting in their back pocket. In the US, we run with 15% margins on a good day. In California and Texas, officials issue red flag warnings if demand rises even slightly. In China, they treat data centers as a convenient sponge to soak up the oversupply. If renewables can't keep pace, they can still flip on and idle coal plants and bridge the gap. Not exactly ideal, but it works. In the US, new generation takes years of permitting fights and lawsuits before a single shovel even hits the dirt. And it's not just hardware either. In China, energy planning is coordinated by long-term technocratic policy. Infrastructure is built in anticipation of demand. In the US, infrastructure is built after 10 years of NIMBY battles and private investors demanding ROI in 5. David Fishman, a Chinese electricity expert, put it pretty bluntly, saying, they're set up to hit grand slams. The US, at best, can get on base. So what's the takeaway here? Well, without a massive shift in how America funds and builds energy infrastructure, China's head start will only widen, which is a problem because AI isn't slowing down anytime soon. And if Bitcoin miners thought regulators were cranky about energy use before, just wait until they're competing with ChatGPT 13 for a power outlet. Whew, gotta watch out for that one. All right, guys, I think it's that time of the day where we wrap up today's show with a little bullish, bearish, or BS. So let's run that stinger. All right, time for bullish, bearish, or BS, where we wrap up today's show and decide if today's top stories are looking good, bad, or just a bunch of BS for our beloved Bitcoin. Let's recap. So our first story, Bitcoin slipped back down to 115K after $500 million in liquidations because nothing says healthy bull market like $500 million in longs getting margin called into oblivion. Bitcoin flushed all the way down to 115 because apparently everyone thought 10x leverage was a good idea. Spoiler alert. It wasn't. I'm bearish on this. Short term, yeah, that's how I feel too. I'm getting attacked by a bear. Short term, this is ugly, right? Price dips, people start panicking, and we get a sea of liquidation emojis on X. But let's be real here. This is just Bitcoin shaking those clowns out before climbing even higher again. You heard Steven talk about it earlier. If you've been around longer than 5 minutes, you know this is a drill. Nothing to worry about, but it's bearish in the immediate sentiment because, it's just another rinse cycle in a bull market wash machine. So bearish to start, but again, long term, I think we'll be okay. Next up, Michael Saylor is back at it again, proving he'll never, ever have enough Bitcoin as Strategy, as they now call themselves, just spent another $51 million scooping up sats. That's couch cushion money compared to his previous billion-dollar binges, but the man is basically dollar cost averaging with corporate bonds at this point. And I, of course, am bullish on Michael Saylor and Strategy's buys. Every time Saylor buys, it's like a lighthouse in the storm. The guy will literally mortgage his soul to stack more Bitcoin, and we respect him for that. Love you, Michael. I mean, that kind of conviction reassures institutions and retail alike. So if Bitcoin dumps, just a reminder, there's a billionaire out there refreshing Coinbase with his credit card ready and waiting for you, and his name is Michael Saylor. So I am bullish on that. Last story, we got one bearish, one bullish. Let's see if we can even things out here on a high note. So a delegation of US tech and AI big brains just visited China's grid and came back looking like they toured the Death Star. They basically admitted that our infrastructure is a glorified dial-up modem compared to Beijing's giga-charged AI future. The subtext here, China is way better at building the giant, power-hungry toys that Bitcoin miners also need. Ooh, I want to say bearish on this, but I'm going to call it BS, and here's why. It's a fun geopolitical dunk, right? But it doesn't move Bitcoin's price today. Long term, sure, it definitely matters that China's energy dominance could tilt mining, but in the here and the now of it all, this is just more academic hand-wringing and an excuse to throw shade at American utilities. Again, interesting geopolitical theater, but it's not pumping or dumping your bags today. So I'm calling BS. So today's final score, we got one bearish, one bullish, and one BS, which means today's market mood is officially BS, all right? Not bullish, not bearish, just one giant shrug with Michael Saylor in the background screaming, buy the dip, while, degens everywhere cry over getting liquidated. It is what it is, but it's a BS day, and that's okay. We have those sometimes. As always, boys and girls, thank you so much for tuning into today's show. If you haven't already, please make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on every platform where people waste their time doom scrolling. And I will see all of you same time, same Actually, different time, 8 a.m. tomorrow and through the rest of the week. Remember our new time, 10 a.m. PST on Mondays, 8 a.m. through the rest of the week. And I will see you all then, assuming I don't get liquidated first. We'll see how it plays. Thanks for tuning in. See you guys mañana.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Hi everyone and welcome back to Stefan Livera Podcast, brought to you by Bold. For American listeners, you can buy Bitcoin over at Bold for the industry's lowest fees, and you can earn the highest Bitcoin-backed rewards with the Bold debit card. Now, joining me on the show today is Albert Boo. Albert is the founder and CEO of Neutron Pay. Welcome to the show, Albert.
Yeah, thanks for having me.
So Albert, I know you've been working on Neutron Pay and I guess Canada-based, but also serving Vietnam. And I know in earlier years you were very much on the Lightning focus, payments focus of things. Do you want to just give us a bit of an overview? Where is Neutron Pay at nowadays, or Neutron at nowadays?
Yeah. So we rebranded to Neutron. We just cut off Pay to make it a little bit easier. So we're still focused on Bitcoin and Lightning. We just do have off-ramp payouts that we supported before, which is pretty much all of Southeast Asia, a little bit of Northern Asia. So we still do have a core focus on Bitcoin. We've kind of evolved a little bit more with a couple more products. Before we were just doing payments, payouts with Bitcoin to payout, and now we did a mobile app, and now we have a product that's Lend that has come out, obviously Bitcoin collateral for USDT. And then we also built out a set of APIs for businesses to easily integrate into the Lightning Network. So that's kind of our suite of products now.
Gotcha. And I know in earlier years you were talking about how, as an example, in Vietnam, some of the regulations were that, you know, the local government and regulators wanted payments to be in VND, but you had to sort of set it up so that when people do Bitcoin payments, maybe on the front end to the end user, they can pay, you know, Lightning, but actually in the back end, it needs to turn into VND. So can you maybe elaborate a bit on that, and how has that view shifted, if at all?
Yeah, no, I think that's the way we approached it before, because when we came here, obviously Bitcoin was a very, very bad word for a lot of people here. Even though Vietnam is one of the top 3 countries for Bitcoin uses on chain, and you can see that on chain analysis. It's been like that ever since even before COVID, for about 3 or 4 years. So when we came here and I was obviously trying to pitch the Lightning stuff, that was very like, no. So we kind of thought about a different approach. So when I was here, I said, well, if the local merchants were able to get VND, but they were receiving it as a different payment, I don't think that would be a huge issue. And so talking with our legal from this side of the world, they said, that is a little bit cheeky, but it does follow the rules of having the actual currency being settled in VND. And so receiving it as whatever it is, because some people do receive US dollars here. And so they'll take the US dollars, obviously. So that's not allowed, but people do that here. So just having Bitcoin and then us instantly, converting it into VND seemed like a more reasonable play. And once we did that, a lot more people started using it, picking up, understanding it. Tourism, a lot of expats here in Vietnam are from like the US, UK, Australia, all over the world. And so when they start using that, and then there's a QR code that we can kind of show, they just hit the Lightning QR code, they pay it, it comes back with obviously the stats on the other side, but the merchant will get exactly what they're looking for. In VND, 150,000 VND is about less than $10 around there. So they would get that actual 150 VND for, say, like a banh mi or something like that, and everyone's happy in the transactions. So that really helped a lot with kind of a lot of the pickup in Vietnam and kind of an understanding of the Lightning and why they would say, okay, I would accept this payment option, because a lot of the people just thought it would be, I would just get Bitcoin at the end of the day. And we kind of had to change that a lot, that narrative here, where they could receive something else but get VND at the end.
Gotcha. And would you say that's still true nowadays, or is it actually changing a bit now? That you know, has the regulation and the attitude, has that shifted, or is it still that mindset?
No, the attitude shifts quite a bit. So I don't know if you know, just as of this year in July, Vietnam actually officially passed into law. They call it, you know, crypto blockchain, but it's Bitcoin and everything else that's actually accepted. So that was officially signed into legislation on July 1st.
Interesting. I might have seen like a news article, but I forgot it. Can you give us the details on that, just for listeners?
Yeah, so now they're really opening up Vietnam to what they call as like crypto blockchain, right? But we just call it like Bitcoin and everything else. And so that's allowed for trading, exchange, payments, pretty much everything under the umbrella that digital assets that they would say would do. I think I got kicked off. Hello.
Sorry, Albert, I lost you there. You just you were just outlining the change in the regulate or the new law around what was, I guess from the government perspective, they're calling it crypto blockchain, but you're saying more like Bitcoin.
Yeah. So they came back and they said the regulation for moving forward with like crypto and blockchain, but we'll call it Bitcoin. They're more open to it now. So they see that they're allowing for payments, exchanges, broker services you want to do if you have a license. So pretty much everything under the umbrella, under blockchain services, you're allowed to do into Vietnam. That starts as of January 2026. But from now until January 2026, there is something that's called a sandbox. And there's certain participants that are allowed to get early access, which is like the banks, larger payment financial institutions, mobile apps. And kind of
you guys in that sandbox?
Some things I can say yes, because we have to partner up with pretty much a bank, and so we are kind of in the race with a partnership with a bank to allow to start servicing legally more services and functions within the space. But yeah, we're looking to partner with a bank to be able to be one of the first to service. Yes.
Excellent. And so, as you said, what exactly is on offer here? So I think you were outlining a bit like, are we talking payments? Are we talking transactional account services? Are we talking borrowing against Bitcoin and lending? What is the government, let's say, permitting now, or giving a regulatory allowance for?
Yeah, so for now, it looks like they're going to start with anything that's a broker exchange, along with payments. So those are probably the first two categories that they're going to start with. As the years go on, they do have other financial products that they are aware of, especially like the lending and everything else like that. But they want to start with those two first to make sure that, I guess, kind of the locals and everyone understand kind of the use and the purpose of it. And also to make sure that no one's getting scammed, right? Because that's a huge thing that's also here as well, is there's a lot of people that are affected by a lot of the token scams and DeFi stuff that's been pushed around here. And so they're trying to clear that out really quickly with a lot of these brokerages and all these solicited kind of tokens that are coming in. So once that's all cleared out, they want to just start with those two. So anything that's an exchange or a broker, or some payments.
I see, yeah. And something I wanted to, you touched on this earlier, and I have heard of this also from talking to other people who are in or around Vietnam, the very high volume that Vietnam has, right? Because it's kind of like, you wouldn't expect that, right? Like you wouldn't expect that Vietnam is kind of that high in terms of how many people are using it. It makes you wonder why. Do you know why that is?
Yeah, if anyone's been under a country that has a lot of capital flights restrictions, and it was also kind of one of the larger export countries, there's going to be a lot of people that are using alternative methods to get money out or investments out. And so like a particular example would probably be like China, right? Everyone knows China. If China were to get into Bitcoin, it would be a massive run, right? There's just a lot of money that's been happening there. But that's also because China is a massive export company. Vietnam isn't that size of China, but it is a very upcoming competitor, as you would say, because a lot of the exports are going to Vietnam, right? A lot of warehousing is being built here as well. And so it's growing very quickly, right? Especially with all the tariffs that are happening. So the Chinese are trying to figure out proxies, and I think people have heard of this before. Trump is taxing Vietnam if they do any more proxies with China, right? So there's a 20% tariff on Vietnam already, and there's going to be a 40% tariff if you're caught doing proxy things, right? So stuff like that cause kind of that investment to come into other vehicles, right? Such as Bitcoin and everything else. And that's why when you see kind of like the on-chain analysis is that ever since it was like, I think 2019 to 2023 or 24, Vietnam has always been in the top 3 of just usage of Bitcoin or other blockchains. And so it's very well versed here. It's just kind of in the hush hush kind of gray area, but people do use it. And so that's why Vietnam's kind of wanting to turn their kind of tough stance and open that up for the locals here.
Sure. Okay, interesting. And so are you able to say, is it like the users of, Bitcoin and maybe stablecoin stuff in Vietnam, are we talking here like entrepreneurs and investors coming from outside Vietnam to set up businesses and then take profits out using Bitcoin or stables? Or are we talking like B2B use of this thing? Are you able to explain that, or do you know?
Yeah, I think it's a combination of both, right? So there's a big manufacturing hub here, right? I think everyone knows, right? So a lot of the manufacturing is coming here. And so it's sometimes a lot of people to get around the taxes and the capital control flights here. They'll go through digital assets, right? They'll go through Bitcoin or stablecoin. And so the government has recognized that, and they know that they're losing a lot of taxes and fees and everything else like that because of the hard stance that Vietnam had before, right? Now that it's cleared, everyone's kind of easing up. But yeah, because of that, Vietnam's finally looked at it and said, hey, we're losing a lot of tax because of what we're doing. Because if you are a bigger business in Vietnam, you're allowed to move money out. It's just a lot of paperwork. So it's very tedious. You got to go do a form. You got to file it into the bank. The bank then goes and gives it to the SBV. SBV is a state bank of Vietnam. They come back within anywhere from 3 to 5 days with an approval or a denial. So a lot of people say, well, that's too long. I need to go and move stuff back, right? So a lot of Japanese, Koreans, and Chinese, have a lot of businesses here. So they need that money back into their countries to go obviously buy supplies and kind of get their profits and investments back. And so with kind of the stable coins that came into place, that kind of went rampant, and Bitcoin went rapid probably for those last 4 or 5 years. And now they're trying to slow that down to say, okay, we'll ease up on this kind of hard stance and we'll collect the taxes now in the proper way.
It's really fascinating to see how it's like around the world, people have different uses. Now, in much of the, let's say, Western TradFi world, it's all about Bitcoin as your kind of long-term store of value, and that's a big narrative. And here, what we're seeing is more like people are using it as like a way to get around things. And I presume a lot of that is stablecoin as well. And so I guess stablecoin volumes are also very high there.
Oh yeah, very high. I think it's just because, Vietnam has always been very had close relationships with the US. And so a lot of the US dollar is still used here as well. And so kind of stable coins and US dollar, 1-on-1. But there is a lot of usage for Bitcoin too as well that people don't talk about. But I think that's because that's more of a tool to be used, because a lot of people that do use it look at it as like an edge, right? So like if I have an edge, I don't need to tell the next competitor that I'm using this edge because I'd rather use them something else, right? And so I call it, maybe it's a bad term, but the smarter money that's in Vietnam already knows exactly kind of the inflation, the money printing. They understand like the kind of business cycles that they have to go through, the fees, the taxes, the capital controls. So they look at Bitcoin as a flight for them, right? That is, it's a safe asset, nothing can get touched. Vietnam's really known for a lot of war, right? So a lot of people are scared of losing money in their assets. And so they always trying to find a specific way to make sure that they're holding those assets, right? And Vietnam itself is pretty much looking at that as well, because, I don't know if you guys heard, like in the last 2 weeks, there was like a Thailand and Cambodia war, right? That has nothing really to do with us, but for some reason, because of, I guess, kind of just trauma in a way, it's like, will we be pulled into it? Will someone ask us for their support, right? So that's kind of led to a lot of people using kind of Bitcoin. They understand they can use stablecoins as well, because it's more of a stable, there's no volatility. But also a lot of people understand here that when you have USDT, there's also a particular point where your assets can get frozen, right? They've seen it, the internet's there, X is there. It's very well known. It's just that you have two groups. You have one group that just understands Bitcoin more and feels more comfortable that way. And you have another group that just understands stablecoins and are fine with say someone freezing their accounts with that type of abilities.
Gotcha. And as everybody knows, right, these stablecoins are obviously not intended to be as censorship resistant as Bitcoin. It's quite public that, when there's like a very public theft, Paolo or some of the stablecoin guys will sort of publicly say, hey, we heard about this theft, we've frozen these coins or we've invalidated them somehow, this kind of thing. And obviously with Bitcoin, it's a different story. And so it's interesting to see that. So would you say, in terms of Vietnamese entrepreneurial and investor circles, kind of smart money, as you were saying, you would say they're pretty Bitcoin and stablecoin savvy, right? Like if you were to talk to like entrepreneur network, like high level entrepreneur networking groups and hanging out with those guys, they would all be pretty Bitcoin savvy, at least to the level where they might use Bitcoin.
Yeah. Yeah. Like I would say they wouldn't be too hardcore. Like if you were saying, hey, do you know how to use a cold card and air gap it? That'd probably be out of the conversation.
Beyond them. Yeah,
but,
of course. Yeah. They're not going to be like, oh, this is what Taproot and Script Path. No, they're going to be like, I use Bitcoin to buy and sell things or to earn and spend.
Yeah, correct. Yeah. So the general use case of like being able to use it, get it, store it, send it somewhere, receiving it, kind of all the above, right, for general use. But yeah, they would understand kind of the basis of it and how to get it. Yes.
Yeah, that's really interesting to see, like just kind of these cultural shifts over time and what is becoming popular, what is becoming, understood, right? Because obviously you and I and kind of, listeners of this show, we're kind of all, hardcore maxis. So for us, it's like, yes, this is this is my jam, but we're sort of waiting for the rest of the world to wake up to what we've been on for a while, right? So tell us a little bit about what you're doing on the Neutron side of things for businesses then. Like we're talking about businesses. I know you mentioned a Neutron API. So what exactly is the API offering there?
Yeah, so the APIs, we changed our focus a little bit, right? Because before we were just payments and kind of like a merchant provider. So we had like a gateway. So we were kind of like BTC Pay, but more of like a custodial side, right? So we provide like an invoice and you could pay it in. So we moved away from that because we just thought the merchant side was a little bit tougher to do. And obviously the merchant always came back and said, where's the users? And so if the merchants didn't see any volume or any merchants, they would just shut off the actual kind of gateway. So now we moved over to more of just providing kind of a product suite to more of like the businesses and kind of more institutional side.
Gotcha. But what's included in that product suite?
Yeah, so that product suite is everything, pretty much just anything that we can service on the Bitcoin side. So pretty much on-chain, Lightning. We push Lightning pretty heavily. So we say you can do kind of like a wallet service. So we would go to any of the mobile apps within the country or payment providers or any type of businesses that just want to be able to accept Lightning or send it. And so that would be able to have them go and integrate kind of the whole suite of products that we would have. So obviously like Lightning, the on-chain stuff, we were going to put in some of the Taproot stuff, but we thought that was a little bit too advanced. And we just said, hey, how about you just kind of do these two products first? Lightning would probably be the biggest thing for instant, obviously, settlement. And it allows them to pretty much interconnect with the businesses that are globally, right? So this isn't really a play for internally for Vietnam. It's more or less for the businesses that are here that have connections globally to be able to accept the Lightning aspect of it. So being able to buy from, like, say, a Cash App user. And now they can buy stuff from, like, say, Square terminals that have opened up, right? So what I mean by that is we would go to an app provider, they would plug in our APIs, they now have a Lightning wallet. So now they have VND, but they also have a Lightning wallet that they can use. They can convert the VND into, obviously, BTC.
So it's like let's say a custodial white label wallet sort of service.
Yeah, correct. Yeah. So because we're full custodial, right? We're trying to move to non-custodial, but we think that the custodial route is better to get users on board and businesses on board. And so the quick example of the reason why we would go to like this mobile app and do that is because now it gives that mobile app what I call like wings or legs. So now a person can go and say, I have this Vietnamese app. There's a big one that we're trying to get to as well. It's called Momo. And Momo is like a kind of a version of like Cash App, right? So really quick is what Momo can do now is because it was stuck locally in Vietnam because it just services VND and locally. But if they were to integrate our APIs and nodule, now they have a Lightning wallet integration. They can now fly over to the US and scan any QR code, obviously from Square or Cash App, and it would take the VND dollars out of their balance, shoot it over Lightning Network, and then the person on their side, say a Cash or Cash App, would be able to get US dollars. Everyone in both parties are happy. No one really cares what's in the middle. They just know that they're able to go and say, I'm using VND in the US, but the actual receiver is getting US dollars.
Interesting. Okay, and so are you seeing that? So talk to me about the end user in that scenario. Are we thinking that is like a retail end user, like man on the street, or are we saying that's like a B2B kind of use case? That's like a businessman in Vietnam who wants to buy something from the US. Like, what's the use there?
Yeah, I would say probably both because they're pretty similar, right? So we'd categorize it both, where one is kind of like a global traveler, where that could be a retail person. Maybe they're just visiting friends and family, but also could be also a businessman too, right? Because a lot of the products that are being sold in Vietnam are also from the US, Europe, or Australia and sold back into Vietnam, right? Vietnam's products are a lot of them come from China. So it's a lot of like the Temu stuff and the Shopee stuff. It's
Like
really
textile
cheap stuff.
and yeah.
Yeah, and it's very kind of cheap and it's not really high quality stuff. Even though some of the stuff is made in China, but they feel that the brands that are overseas bring more kind of value, right? And they're actually more kind of looked after and kind of screened for any type of like, regardless if it's quality of clothes or products that they're buying that are like consumption, food, or anything like that. So that business side could also be the same thing. Like a business guy could go over to the United States and say, I want to buy a bunch of crates or something like that from the US and bring that over to Vietnam to resell. And so having that ability to have in that mobile app to be able to use, say, Lightning, instead of doing like a Swift or wire transfer, you can actually pay that instantly. So that's why we say it would be from both angles, right? It can be retail or a business guy, because in Vietnam, everyone does everything on their mobile phone. Everything. Like
Gotcha.
there is probably maybe, probably skewing the numbers, but I would say probably maybe 10% people use laptops to do a lot of stuff, but everyone
so
is
it's like
using mobile
first.
phones.
Yeah.
Yeah, mobile is first, always. You'll see
Yeah.
business people in cafes, meetings, there's no laptops. Everybody has a phone. Everyone is doing something with texting, sending files, sending payments. There's nothing with a laptop. So
Yeah.
it's kind of funny because Vietnam grew up with, it did a leapfrog, right? I think I might have mentioned this before in another podcast where it's like in the US and where we're from, right? We went from like, laptops, desktops, dial-up and all that stuff all the way up to mobile phones. Vietnam literally went from dial-up to mobile phones. Like
Yeah,
they
they
didn't
really
have
leapfrogged
desktops.
it, yeah.
They really leapfrogged. So that's why they're very used to
Yeah.
just doing everything
And I'll
on the
point
mobile
out as
phone.
well, I just looked up, the median age in Vietnam is 33 years old.
Yes,
Right? So we're talking
yeah.
about like a young population, right? It's not
Yeah.
like some of the Western countries where the population is aging. These are young people on average.
Yeah, yeah. And it's very driven here, right? That's why they see a lot of people are saying Vietnam has a lot of people that like to hustle. It's just because of that average age that you brought up. Is everyone's in that bracket when they're about 30 to 35. They really want to go after something. They want to get their own business. They want to make a lot of money for themselves. Everything's quick, everything's fast. A lot of these people don't even use banks, right? They'll use a lot of online services.
Like neobank crypto
Correct.
services.
Yeah,
and things
yeah,
like this.
yeah. It'd be like neobanks and crypto services and the mobile wallets. They don't go to actual banks anymore. They feel that it's too slow and cumbersome for the lifestyle that they're doing with their business.
Gotcha. And so then you view Neutron as trying to either become that or sort of plug into that vision. And then on the wallet side, I presume then, are you designing the wallet, is that for a Vietnamese user or like Vietnamese diaspora or just anyone around the world? Like who is it designed for?
It's pretty much anyone. And I think that's why it's we kind of skewed that a little bit, where we thought we were only like in our narrative that we were just only focused on Southeast Asia. We were just doing that on this part of the world because we just feel like there wasn't enough education and people using it here, right? But it is for everyone. It's global, right? Like just like how Bitcoin is, it should be open. It's just that we didn't want to do all the competition in North America, right? Because in Canada, at that time when I was doing it, there wasn't really any need for it, right? There's pretty much stable services there with banking and credit cards and debit. And US is just very competitive. So we would have probably drained a bunch of money just trying to, fight our way to the top. Where in Southeast Asia, there is nobody. I don't think there is still anyone that's doing anything that's Lightning based at what we're doing to try to push the envelope in the country and in Southeast Asia. So we're trying to get more businesses, institutions kind of to start using the Lightning Network in a different way, right? Because a lot of people just like to use, like if you hear the narrative a little bit in the US, now it's moving a little bit. But before it was just buy Bitcoin, buy, save, hold it, don't do anything, right? Whereas the narrative, what we're saying in Southeast Asia is you can buy it, save it, but you can also use it, right? A lot of cross-border trade happens with a lot of digital assets, right? Like today, it happens with a lot of stable coins. And now we're trying to push that narrative with Lightning and saying Lightning would also be a better solution for this, right? We're not saying we can displace stable coins, but we say, how about you put it as beside one another? And now you have two options. You can either use stable coins or you can use the Lightning Network.
Yeah. And while we're there, I guess curious to get your take on some of the recent news around things like Taproot Assets Tether, or even like the RGB guys. Like there's this effort to quote unquote bring stablecoins back to Bitcoin per se. Like it started on Bitcoin on the Omni layer, then transaction fees went up, and then Tether went to basically a lot of the uses on shit chains, right? Ethereum and Tron and whatever. And now we're starting to see a little bit of liquid Tether. It's growing, but it's still small compared to kind of the Tron and whatever other stuff. How are you seeing that now in terms of quote unquote bringing it back to Bitcoin?
I would say it's still an uphill battle, especially for those kind of side chains. Like the biggest thing in kind of this side of the world is Tron, right? Tron is just hands down very, very saturated here. Everyone uses a lot of the USDT on Tron. And I think that was just because Tron had obviously a huge advantage, right? With kind of China and, Justin Sun kind of really pushing in Southeast Asia.
Yeah.
And that's what I mean, right? Is there was no one pushing that narrative of Bitcoin on this side. It was just all North American and all kind of the Western countries, right? And no one was really focused in Southeast Asia and Northern Asia, like the China area. And I think that's where, Justin Sun really got dominance, because he was like, no one's here doing that. I'll just kind of spread Tron, and it just really broke out really further. And I noticed that a lot of stuff is now Tether's trying to do the same thing. They're trying to break into just them saying, hey, just use Tether, all these other blockchains and stuff like that. That's why I say it's a little bit of a tough uphill battle with, like, say, RGB and say Liquid trying to push maybe Tether and use their networks. It's just that everyone's so used to using Tron, and now to get them to move away from that would be a little difficult. I think now, because that we push a lot of the Lightning kind of thing, they've understand like Lightning is a little bit better, and they understand the Bitcoin purpose of it. People use it already, but now they see that the method of it being a little bit quicker, and hopefully with Taproot and supporting Tether, I think that would easily move that narrative over to taking some of that market share away from Tron.
The lead sponsor of this show is Bold, the banking platform designed for Bitcoiners. With the Bold virtual Visa debit card, you earn Bitcoin back on every purchase. The more Bitcoin you buy with Bold, the more sats back you get on the card. Buy $2,500 of Bitcoin and earn 3% sats back. Keep stacking with Bold to earn up to 10% sats back. Bold offers the industry's lowest fees on Bitcoin buys and sells with zero added spreads. When starting out, you can use Bold Wallet, which is managed by the team, but Bold is also supporting self-custody with Bold Vault, a 2 of 3 collaborative custody multisig for zero monthly fees. With Bold, you get your own FDIC-insured checking account to store and send fiat, pay bills, direct deposit your paycheck, and replace your legacy fiat bank. Sign up today and get zero fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Go to getbold.io. This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. Yeah, interesting to see. But I think that's also what we're seeing now, where different, let's say, Bitcoin-focused apps are trying to build in like swap services, right, in the background, or this kind of thing. Like probably Aqua is a good example where, yes, it's a liquid LBTC, liquid Bitcoin-based wallet, but in the background they've got like swaps for other chains to swap in your Tether from Tron and whatever else. And then I guess on your lend side, because you're doing USDT, so talk to us about that. Are you doing like Tron Tether there, or how are you doing that?
Yeah, so we're only supporting like the 2 blockchains, which would be Ethereum and Tron. And we chose those because we just didn't want to start supporting all the other blockchains, because we really want to have a push for Taproot assets, Liquid possibly, and RGB. So more of kind of closer to the Bitcoin kind of ecosystem than the other ones. And if that gets taken off a little bit higher, then we'd probably want to drop off like Tether and not Tether, Ethereum and Tron,
Right,
and
yeah.
focus on those other ones more. Yeah.
Yeah. But I totally get you. Like, it's an uphill battle right now.
Mhm.
Yes, I think we're starting. I would say it's fair to say we're seeing some green shoots in terms of the liquid Tether side of things. Like, we're starting to see more people who actually truly do use that. But it's still early days and still not at the level of Tron Tether or Ethereum Tether. So I totally understand that side of things. Talk to us about the lend. What we're talking about, the lend product. What are the terms there? Give us the overview. What's the loan period? What's the rate? What's the LTV? Just give us the high level stats there.
Yeah, so high level stats is, so we're offering anywhere from 6 to 12%. So the higher amounts obviously get the 6%, the lower amounts get 12. And so anywhere in the middle could probably get around, the 8 or 9%.
Gotcha. So
We do
just to be clear, the 6%, how much do you have to borrow to get that rate?
over 150,000.
Gotcha. Okay.
Yeah.
But
Yeah.
6% for USD
Yeah.
lending actually is pretty competitive compared to what's out
Yeah.
there.
Yeah, and that's what we're trying to do. We're trying to be very competitive in the market, especially kind of in the region, to hopefully get as much market share as we can. And we feel, I think 6% is a good deal. I
Yeah.
think there's other people that are trying to lower to that rate. But yeah, so for us, we're pretty much 12-month term as well. We are going to work on a rollover too as well. So if they wanted to extend it, then it would just be a rollover with a fee. So it'd just be like, how long did you want to extend it for? And we'd extend it for another 12 months with a fee. You would
Gotcha.
still have the same percentage rate, right, until you paid it off. Our LTV is just 50%. We do have 60%. We don't recommend it in the platform because we just say, hey, do your management services. If you understand your finances and stuff like that, you can select 60, but default is 50. And so
Yeah.
we feel that's a safe spot.
Yeah. And then
yeah.
where are the liquidations and how does that part work?
Yeah, so the liquidation is, so if you use 50% LTV, so we'll do it all the way down to about, I think it's about like 92%. So as soon as 92% is hit, and then we'll do the liquidation. We're working
Gotcha.
a
But
little
you
bit
have
to
margin
make it.
call levels before
Yeah.
that, right?
Yeah, margin calls. We have a bunch of notifications too, where it's like yellow, and then going into red, and then right when you're about to get liquidated, we'll start firing a bunch of emails and notifications.
Gotcha. And so just to understand the product then, who are the target markets here? Like, are we talking Vietnam or C or Southeast Asia or around the world? Who is eligible to borrow against a Bitcoin?
Everyone.
Right. So you're
Everyone's-
just going,
yeah.
yeah.
Yeah, we're going everyone, but we do have a little bit more marketing in Southeast Asia, just because, again, we're trying to still kind of just encompass just in Southeast Asia to be like, hey, these are the products, this is the financial services that you could use through us, right? With Lend, you can tie it in with mobile if you want. Eventually, we're going to put it into the mobile side. Right now, it's just a web platform. And so that's what we're just trying to target, but anyone can use the Lend product in the world. It's just that because we're in Southeast Asia, we have a lot of the communities here, so we kind of talk to them a little bit more and figure out like, what's their interest and how they would want to do the loans. And it just seems like it's a little bit more of a closer knit with us because we've been here for so long, right? With boots on the ground.
Gotcha. And then now, okay, so we spoke about how on the Lend side, the USDT availability is Ethereum Tether and Tron Tether, just because that's the most popular. Do you also offer like actually just fiat wire or fiat Swift or something like that, or is it actually just stablecoin only?
Yeah, it's only stablecoin only.
Gotcha. Okay. And then I'm curious because this is something that seems to come up when, as an example, you talk about international banks. For example, a lot of international banks don't like having American customers because of the regulation and the compliance, right? Because of whatever FATCA and FBAR or whatever these other regulations are. And this is like a famous thing. Even like Swiss banks don't want to have US customers. So how is it that you're doing that then?
Yeah, sorry. So I forgot to say, like, we're not servicing US customers because
Okay,
of
gotcha. So
because
it's
of those
kind of
regulations.
global minus US. Okay.
Minus US, yeah.
Gotcha. Okay, fair enough. And then, yeah, certain jurisdictions are just seen as sort of high risk. Again, I'm against AML and sanctions laws in principle, but this is the world we live in. Unfortunately, or in America, it's called BSA, Bank Secrecy Act, but basically, and Patriot Act, arguably as well, kind of in there. Yeah, so I guess these are some of the trade-offs, right? And of course, there's different. We have to think about the different trade-offs of the different options out there, right? Because yes, on one side there are some of the products that allow the hodler to still hold maybe one key out of the quorum, so like an Unchained, or like a hodl land, or Debify, or Firefish, or Lava, like some of these options out there. And then you've got more just, deposit your coins with us and we'll lend you, fiat, right? And there's a spectrum of different options there. Some of those include things like, hey, no rehypothecation, or you have a better assurances that there's no rehypothecation, but maybe you pay a bit more on the interest rate there, or it might be a slightly more clunky experience. The custodial products, maybe they can offer, in many cases, slightly better interest rates, maybe a slightly slicker UX, but you're taking a bit more in terms of custodial risk and theoretically rehypothecation. So how do you see that? Do you see that as a fair analysis? Where would you agree or disagree, or where would you add anything to that?
Yeah, I mean, there's going to be some products with kind of that. Yeah, I guess people would call it like trust me, bro. We don't want to be in kind of that camp. So we've kind of for us, we've kind of split it up a little bit, where obviously like the user gets a key, we have a key. We have this. I don't think it's a unique solution, but I think there's other companies that are doing it today, is where we'd give it to a trusted, well-known third party. So we already have partnerships with like BitGo and Kobo. So those would be two of the key holders that we have. And then you could select if it's BitGo or Kobo. So Kobo is going to be,
So in this model, actually the user is holding one of the keys.
Yes, the user is holding one of the, they're holding one of the keys, where they have a couple options, right? So one option is they can generate it. It'd be held up in kind of the browser, right? And it gets encrypted, and then they'll hold it with a password.
Well, I'd be a little bit wary about browser key security though, but go on.
Yeah, but it's encrypted, and then if they lose a password, then we can't recover it from them. So that's where kind of BitGo and Kobo would come in. We have a key. They could also have, so we also have a particular software where it's called Neutron Guard. So you could download the app, you can pretty much create your keys, and then you can load your public key into the actual lending thing. So you would say, here's my public key, here's our key, and then here's BitGo's key, and then we would create the multi-sig. So now you have full control offside of our platform onto an app that's going to obviously be open source pretty soon. And so it's called Neutron Guard, and you could use that if you wanted to. And then the next
just to be clear, this is like a 2 of 3 multi-sig lend setup, or how does it?
Yeah,
like as in on chain is a 2 of 3, but the user holds one key, right?
Correct. Yeah.
Right.
Yeah. So they can have the user generated key. They can use our new Neutron Guard app, which would also generate the keys on their phone. And then the third one is we're eventually going to allow them just to plug into a hardware wallet and just say, here's your public key, and then if they want to sign it, then they would sign it from their hardware wallet.
Oh, gotcha. Okay, so that's so. But to be clear, that's a future option, not currently.
That's a future option, not currently yet. Yeah. Soon.
And then, do you currently just offer like a full custodial option, or no?
We don't. No.
Okay,
so we don't want
either the browser option or this Neutron Guard, which is a phone app key kind of thing for now.
Yeah. Yeah, for now.
Gotcha. Okay, interesting. Okay, so that's interesting then, because because when you first explained it to me, I first thought, it's like a fully custodial thing, but actually it sounds like it's better than that. Actually, you actually do have no rehypothecation on the coins, obviously. So that's actually a good step.
Yeah, and that was kind of the purpose of what we really wanted to build, right? Because we wanted to follow in the footsteps of, we're trying to move over, like Neutron itself is trying to move over to non-custodial products while still having custodial products. So our business plan was to make sure that if you want to do custodial, you could do custodial. If you don't want to, then we have a suite of non-custodial products that you can do. And this was kind of our first kind of move into that. So Lend is pretty much, there's no rehypothecation of your Bitcoin. You can see the actual multi-sig of where your Bitcoin is, and it's not going to move because obviously you'll have a key, we have a key, and then the trusted third party has a key. And so as soon as that's paid off, it automatically shoots back to the user.
Gotcha. And so then when the price of Bitcoin drops, and like we're talking about margin calls and liquidation, actually what's happening in the back end is Neutron has to coordinate with either BitGo or Kobo to do that liquidation in that case. So let's say the price drops, really quickly. Again, none of us wants this to happen, but again, just to understand what is the failure scenario for the user. it would be like if the price drops really quickly, they are not able to deposit new collateral or pay off the loan. Then at that point, Neutron has to coordinate with BitGo or Kobo and Kobo to sell the collateral and liquidate that user. That's that's the model, right?
Correct. Yeah, that's the model. Yeah. So we're still at risk too, right? Because it does take a little bit of time to get that collateral to get liquidated. But we look at it as if it ever is going to get liquidated, because we are a Bitcoin company, that's the risk that we're willing to take, right? So we're willing to take on the Bitcoin. And even if it does drop to a lower price point, if it, obviously catastrophic drops all the way down to, say they borrowed at 100,000, it drops to like 50,000, we'll still take that 50,000 in Bitcoin, hold it, and then wait for it to go up.
Gotcha. And then in terms of the funding side of things, like, are you, because different platforms, I'm trying to understand how yours works. Are there people who want to come to you and say, hey, I want to lend out fiat? Or do you have a bank who you're partnering with, like in terms of funding and capital source for the loans?
Yeah, a lot of it is private capital, some VC investment firms too as well that we talk to. And so we looked at it and said, here's our product, this is what we're doing. And so they were interested in it. So a lot of the good VCs that we already had in our investment rounds were helping with us with this. So that's kind of helped a lot, and just kind of showing them how it works. It actually also helped because the market is actually moving forward with a lot of the lend products. I think everyone's doing it now, right?
It's
so it's helped a lot.
I think it's very. I think it's. I've been saying this before, but it seems like the number one hot topic is the treasury companies, and number two is lending, right? Like there's so many people who are interested in lending recently, both on the borrower side and the lending side. So it's kind of interesting we're seeing this, and this is definitely what I'm hearing from many people who I talk to in the industry. So it's heating up. But I do find it interesting that you've got as low as 6% over 150K. Like that's actually pretty low. Like I'm surprised you managed to find people willing to lend you fiat that cheap,
Yeah, like what we call it is like a phase, right? Like I think we have a certain phase of, it's kind of like the discount kind of era where it's like, we'll give you this amount.
Intro rate.
The intro rate. Yeah. And if you stay long enough, we may be able to keep it around and keep the investors a little bit happy, even though it's super low. But I think as long as we can get a lot of the AUM under, and we're issuing out a lot of the loans, the investors would be happy, right? Because the interest rate, although it's not as aggressive as the other ones that they're not collecting it, but if there is a lot of interest and a lot of people are doing it, usually that 6% we will try to keep. But it's an introductory phase. Yes, there's probably going to be a little bit more of an increase as probably more loans are coming in, and there are a lot of loans that are coming in now. And so our block is almost kind of filled up, and that's why I call it. We call it like the block. So once the block is filled up, then we got to go back to investments and say, hey, this whole block is completely filled up. Could you give us another block? Yeah. We need more capital. And this is, proof that here's all the actual loans that are on chain. You can see them for yourself. And would we be able to get it again at 6%? And so that's us negotiating back with them again. And hopefully they will give us a 6%. And so we are in talks right now to try to get another block for obviously the 6%. The third block, probably not. We'll probably not get 6%, but we'll try to get around under the double digits for sure.
Gotcha. Yeah, and I mean that's kind of the big question, because that's been, I would say, when I talk to like Bitcoiners and hodlers who want to borrow against their stack, some of the pain points have been, oh look, man, like the loans are only 1 year. I would really like more than 1 year, and the rates are a bit high, right? Because historically it's been like 14, 15%, like that kind of level. And so those are probably the two main blockers that I can think of for a lot of people. And over time, I think these things will get kind of solved, or over time as Bitcoin grows, there'll be more interest in these kinds of things. But that's where we're at for now. I'm curious, in terms of the use of these loans, is it generally going to be people who, like, are we talking like hodler who wants to borrow against some coins to pay his living expenses, or like person who wants to lever up on Bitcoin and borrow some fiat to then buy Bitcoin, or borrow Bitcoin for some kind of commercial use case? What are you seeing? Where has the interest been now?
Yeah, it's been probably both with the latter ones that you're talking about. So a lot of them taking out the loan and then buying more Bitcoin with it. Kind of, we call it like a little bit more the degen kind of side. But we can't say like that's their money, right? If they want to do that, they want to lever up, then that's up to them. We do see a lot of people wanting to buy commercial, like real estate, which is really interesting. Not too interesting, but I think it's probably pretty much the norm, is that people want to buy other assets with it. And so we see a lot of commercial buying. That's why there's a lot of people asking for rollovers, because they're saying, I'm buying this property. I need more than 12 months to be able to do it. Could you offer a rollover? And we do offer rollovers. It's just when it comes to that point, it's just a fee, and then you can roll over for another 12 months. And so we see a lot of that. So it's a lot of commercial building, buying other assets. An interesting one that we see now that is coming in a lot is people are buying it to buy the Bitcoin treasury companies.
Yeah.
A lot of that is coming in.
Yeah, I think that's that seems to be the play, because it's kind of that's like the number one and number two hot topics, right? So it's kind of, it was only natural that we were going to see that kind of practice. Of course, it depends how things go this cycle. Of course, the obvious comparisons, everyone's going to be like, oh, FTX, BlockFi, Celsius, etc., 3 Arrows Capital, whatever. But yeah, I'm curious how you're seeing that then. Like, are you hearing a lot of people talking about that, worried about those things, or right now it's like, nah, full steam ahead, we're in the bull market? What do you think?
Yeah, like I think it is okay to do now, because I don't think we're actually fully into the bull market yet. I think in a couple more months, I think we'll actually really see kind of, what the bull market really presents. But I think we're just at the start of it. I think it's a good time to do the loans. Obviously I'm going to get a lot of, maybe, bad kickback on it, but I think now is better to do it than at the top, right? And I think that's where a lot of people are going to fall suspect to it, where say Bitcoin goes all the way up to 250,000, and they're like, now I want to take out a loan. I think it's a little
risk. I would not.
Yeah, that's a very risky, right? So I would say do it while it's mid. I would say now. Obviously, know your financials and understand how you're going to do your finance. But I think now would be a very good time to do the lend and then do into treasury stocks and wherever else. Because once it does go up, then you would want to exit then, right? Not when everyone is kind of FOMOing in and institutions and countries are buying it, and then there's going to be a catastrophic fall, right? Because I think that's just going to happen. That's just in Bitcoin's nature, right? As much as people say that it's not going to happen, people need to take profits. That's what happens, right? It's not a correction. It's just people saying Bitcoin is $200,000 or $300,000. There are people that are going to take profit. People have responsibility. People have lives to do, and not everyone is like a hardcore Bitcoin maxi like you or I, where we would like forever keep it, right? And just loan against it. There are other people that just do have normal lives outside of Bitcoin and want to take care of their families. And maybe they feel that being cash heavy rich and having a house is just their normal life, right? But getting to that point, maybe is exiting Bitcoin at 300,000. I don't know, right? But I think that's just, there's always going to be different groups that do that. That's why I think it's just kind of, you let the person decide, right? That's their money. If they're in it for the ride, great. And if it changes their life, that's even better, right? I think that's the main goal, right? Is that everyone gets out of kind of the rat race. Everyone has a very good life for their families. And if Bitcoin is able to do that, and we're able to provide the products to be able to do that for them, I think that's the biggest goal.
Yeah, and I think it's not even a 0 or 1. Like I'm sure there are long-term hodlers, and I mean historically that's been what's happened, right, in these cycles. If you sort of look on chain, look at the like kind of Checkmate and some of these other on-chain analysts are looking and they're saying, well, look, every time these cycles have been, it's like the smart money and the whales who effectively